Minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. And the law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they've done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had is kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. You know, potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be you could be fined, you could be banned from trading, and, you know, in the most extreme cases, there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. You know, one obvious one is going to be that they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That, you know, they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that, you know, we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, you know, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided.
The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2, 3, 4.
If you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work. Nature Conservancy and many others see that carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in this story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and makers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low cost offsets and a lot of them because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system. And you end up in sort of a race to the bottom. And that's what we've seen happen. You know, when it comes specifically to the topic of carbon offsets, you know, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But, you know, if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And, you know, after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. You know, we're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. You know, we need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
the Hyperloop. There's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
This is a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes! It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop. The basic idea goes a little something like this. A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial, be like a sports car. Yes. We got to about 108 miles an hour on that test. And it's a short run, it's about 500 yards or so, and came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was like, is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving, and most importantly, they've probably gotten off of one before, they've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are like the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single supercity economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near-vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on- and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network that in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects, and the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for, and why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe.
On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them there and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be part of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's been super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $7 to $9 billion US agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way through the supply chain fuel was now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, we've kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial, it'll never be supplied in the quantities we need it, you know, blah, blah, blah. Now we know, let's take action. It's practical, it's implementable, let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, you know, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know of which is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's World headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. First trading day of the new month, and it is a down day for the Dow, the S&P, and the Nasdaq Composite Index. Stocks are sinking for a fifth day. A measure of the dollar surged to a record after data showed the U.S. economy remained robust last month, even as the Federal Reserve stepped up its inflation battle. S&P down now by 29 points, down 0.7%. The S&P did drop as much as 1.3% to start the new trading month. The Dow now lower by 70, a decline of 0.2%. We've got Nasdaq down 208, a decline there of 1.8%. 10-year yield 3.25%, the 2-year yield 3.51%. Spot gold now down $13 the ounce, below $1,700, $16.97, a drop of 0.8%. West Texas Intermediate crude now at $86.14 a barrel. WTI down by 3.8%. Jobs tomorrow morning. As for the overall market backdrop, Katie Kaminsky is Chief Research Strategist at Alpha Simplex Group.
I have to be honest, this is what we've been predicting and thinking about since earlier this summer. We've been worried that the market was too optimistic and that the reality was going to set in. And that's exactly what we're seeing. That short bond trade continuing. You're still seeing also the strong dollar. And really sort of the only thing that's changed direction has been the commodity block, which is really starting to show some recession type and demand destruction like activity.
Well, in commodities, specifically crude, again, West Texas Intermediate, that is down 3.8%. NVIDIA down the most in more than 2 years after warning that new rules governing the export of artificial intelligence chips to China may affect hundreds of millions of dollars in revenue. NVIDIA plunging now by 10.7%. 3M plans to eliminate jobs as part of a broader cost-cutting drive in response to the slowing economy, according to internal communications. 3M up now by 1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the U.S. Open in Flushing Meadows, New York, it is a sunny Thursday here in New York City.
Imagine being on the tennis court right now. We're kind of cooking here in the media center.
Yeah.
Right outside the media center.
Yeah.
The energy is amazing. This place is packed.
It is packed, and we've got matches going on, practices going on all around us. What?
Do you think anyone here is paying attention to the equity market?
I hope so. Yeah, I think so. There's probably a few investors on site
Pulling
here.
out their Bloombergs in between points, in between games.
What?
Saying, wait a second, we're starting the month off not on a pretty good note.
No, exactly. And, we got another strong economic data point, and that's reminding everybody, the Fed's going to keep on raising interest rates. We're going to talk about the markets in a moment. We've got lots from the U.S. Open.
Yeah, including the Serena Williams effect. Wow, that is happening right now as we speak. I just saw someone walking around wearing our I Heart Venus Williams shirt.
Aww.
Of course, she's out of the singles. But she's got doubles coming up.
The two sisters playing tonight. We're also going to talk about the celebs that are here cheering on Serena. We're going to talk also with a negotiator who's involved in a deal decades ago that may very likely have kept the U.S. Open here in New York City.
We'll also be joined by Kristen Corio, USTA's Chief Commercial Officer. She's going to join us toward the end of the program and talk a little bit about these sky-high ticket prices.
Yeah, it's been pretty expensive to come here. And the VP of Sports and Entertainment Partnerships at IBM on their multi-year expansion deal with the USTA. So we've got a lot coming up. First up, though, let's get to the Market Drivers Report. And let's set your Business Week agenda with the poor folks who have to be back in the studio and not here at the
Carol,
Open.
so rude.
I'm sorry.
They're not getting sunburned,
harsh. That was pretty harsh. Let's bring in our team, of course, with us to talk about the markets today and the economic news. Kriti Gupta, markets correspondent at Bloomberg in our Interactive Broker studio, along with Michael McKee, international economics and policy correspondent at Bloomberg News. We do have to talk about the markets, but I do feel, again, that it's driven by economic news. Mike, let's start with you here. What about the data points that we got today that might be worrying some of the investors in financial markets today?
Well, you got to look to the ISM report. It was actually quite a surprise. Very good news. And I might mention, Tim, good job with the hat, as somebody who knows hats.
Thank you. You got to watch the sunburn here.
I forget you guys can see us.
I'm waving to you, Mike, and I'm waving to everyone watching on YouTube.
It's very breezy and windy.
But the ISM number came in flat, 52.3, same as last month. People had expected
Mike
it to
McKee
go
and a
down.
Stetson.
And then we had better orders. The orders went up. In the number of on inventories went down, which suggests there's still more stuff to do. Employment went surprisingly up, and the prices paid number dropped a lot to 52. That's sort of a regular level for prices paid. So a stronger growth, lower costs, less inflation ISM report, and that's got to be scaring some people. Because they're going to focus on the stronger growth and the idea that the Fed might have to do some more. We'll see tomorrow how that employment aspect plays out.
So, Mike, one more to you. I mean, all of this holistically is pointing to the fact that the Fed is increasingly looking like it's going to have to go 75 basis points in its meeting at the end of this month, right? I mean, that's what the traders are saying today. That's the interpretation that we're seeing in the equity market, at least.
Well, that's what they're saying today. We saw after the jobless claims a big reaction in the markets, which I thought, from a logical sense, didn't make any standpoint. This is didn't make any sense. This is my Leonard Nimoy moment here. It's not logical.
Okay.
Mr. Spock's not logical because obviously tomorrow those bets are all going to change based on what happens with the jobs report. And then on the 13th, I think inflation is going to play a bigger role. If we get a decent number anywhere from around the whisper number of 281 to 300,000, but it doesn't go above that, it's still a strong report and would justify maybe 75. But if inflation drops, if the ISM is any harbinger, then the Fed could easily just do 50. So I think we got to wait until that CPI report on the 13th of September.
All right, Kriti Gupta, come on in on the markets today. Bouncing around, but we are definitely, definitively, especially when it comes to the NASDAQ, down.
Yeah, bouncing around. I mean, this is a chip story here that you're seeing in the market. It's funny because the drumbeat is, of course, the payrolls, but the real kind of micro story that is dragging down the entire index is going to be the chip sector. And it's really not even a question of demand. It's a question of regulation that NVIDIA and its peers really now have to deal with as you see the Biden administration really make some pretty big strides to say we are not all for endorsing the idea of the likes of NVIDIA serving Chinese customers at a time when the demand is so strong stateside. And at the same time, you, of course, have the supply chain issues rearing its ugly head with the massive lockdown you're seeing in China, a major tech hub for a lot of American supply chains. Think Foxconn, think Tesla, think other automakers as well. So this is something that's going to have massive repercussions. So to me, Carol, it's a chip story, it's a China story ahead of course, the jitters coming tomorrow.
You don't have, you're preaching to the choir because I constantly focus on China. Everybody makes fun of me, but I'm constantly focusing on China.
Well, Kriti, I mean, it's interesting that you said it's before the jitters of tomorrow's jobs numbers, but you just went through these two huge reasons just now, and in the last 40 seconds that we have with you, give us an idea of the way that markets could move if we get a surprise, upside surprise tomorrow with the jobs numbers.
Just quickly.
Yeah, look, we've had 5 days of losses here on the benchmark, so it feels like the momentum is leading to some sort of positive impact, whether that is dictated by the fundamentals, the idea being that we need higher unemployment, or whether that's dictated by we have a better payrolls number than expected. I think either way, the technicals point to a positive reaction.
Mike, you too, quickly, 20 seconds. So what do we have to look for in that payrolls number tomorrow?
Well, the participation rate will be important. Also, the number of people who are unemployed in the household survey. If that starts to go up, then it suggests unemployment will go up. The Fed is looking for that. But with jolts as high as it is, maybe those people get jobs and we don't see a change.
All right. Good stuff. Great start for us on this Thursday. Kriti Gupta, markets correspondent at Bloomberg, and Michael McKee, international economics and policy correspondent at Bloomberg News. He's going to be a busy dude at 8:30 a.m. Washington time with that jobs report tomorrow. Hey, a headline crossing. Lawrence Tozzi's Westcap Management writing down the combined value of its main investment funds by almost a fifth in the second quarter as prospects dim for Silicon Valley startups to swiftly generate windfalls. We are, Tim, in a different environment.
Yeah, we certainly are. We're going to be digging into that throughout the program today. First, though, world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Well, the legal battle between the Justice Department and former President Trump is playing out this afternoon in a Florida courtroom. The Trump legal team has requested a special master to review documents that were taken from the former president's Florida home. But the Justice Department has argued in a court filing that an independent review could compromise national security. A federal judge is expected to rule on the request after today's arguments in court. The judge is forbidding any communications out from the courtroom, so we won't likely hear anything until the hearing is over. Former President Trump has settled a long-running legal fight with House Democrats over a subpoena for years of his financial records. We get details now from Bloomberg's Amy Morris.
This deal is with the House Oversight Committee, which was looking into, in their words, conflicts of interest, self-dealing, and foreign financial ties. The case dates back to 2019 when the committee subpoenaed Trump's accounting firm for 8 years of his financial records after his former attorney, Michael Cohen, testified before Congress accusing Trump of fraud. This is not related to a separate court fight between Trump and the House Ways and Means Committee, which is trying to get its hands on Trump's tax returns. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden wants voters headed into midterm elections to think more about Donald Trump and less about the economy. The president has been portraying the Republican Party as still being under the spell of his predecessor and his false claims about the 2020 election. Last week, he referred to his opponents as semi-fascist. Tonight, President Biden will amplify his message in a speech in Philadelphia. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. with World and National News. We are, of course, live at the U.S. Open. We've got some great interviews coming up in just a moment. In the meantime, one story jumping out from us, or for us, I should say, from our David McAfee on the Bloomberg, is about an attorney who was disbarred in New York after being convicted for embezzling about $500,000 in investor funds meant for the launch of a fantasy football lottery game. This is according to a state appeals court, an appellate court, their ruling.
Timothy Cobb pleaded guilty in federal court in Georgia back in 2019 to wire fraud and filing a fraudulent tax return. He was accused of soliciting investors to create a fantasy football lottery game with several state lotteries and then using the funds to pay for travel to Barbados and, Carol, other personal expenditures.
Yeah, you can't do that.
No, not allowed.
Yeah, Cobb was sentenced in 2021 to 1 year and 1 day in prison, as well as 3 years of supervised release. He was also directed to pay $488,000 in restitution. Yeah, interesting. I haven't been really following this. Had you?
No, I haven't either. The admission that he made, read in conjunction with the indictment to which he pleaded guilty, satisfy the elements of a scheme to defraud in the first degree, which is a Class E felony here in New York State, and also grounds for automatic disbarment.
So listen, okay, so that's going on. We're obviously at the U.S. Open. We've got some great interviews coming up from the Open, and we're going to get to one in just a moment with someone who has really followed this tournament for a long time, has written about it. So we'll get to him in just a moment. In the meantime, this isn't your first U.S. Open, is it?
No, I've been to quite a few of these, but this is probably the buzziest I've ever been to. I mean, the energy here, because it could be Serena Williams' last major, is a really big deal.
Yeah, and what's interesting is that, we haven't been here for a couple of years because of COVID.
That's right.
And so it's been a while since we've been here, and I'm just kind of shocked when I got here. First of all, it was crazy traffic to get over here, and mind you, New York roads there's a lot of construction, but it is jam-packed, and it's early on.
They tell you to take public transit, Carol, for a reason.
That's Tim saying he told me to take public transit, and even Paul Brennan, our producer, is like, no, you got to take a car. I'm just saying.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. First trading day of the new month. It is a down day for the Dow, the S&P, NASDAQ, and the NASDAQ 100 index. Stocks sinking for a fifth day. Right now, the S&P is down 25, a decline of 0.7%. Dow Industrials lower now by 67 points, down 0.2%. And we have got NASDAQ down 190 points, a drop now of just about 1.6%. The 10-year yield, 3.25%. The 2-year yield, 3.51%. Spot gold is down 0.9%, $16.96 the ounce. West Texas Intermediate crude now at $86.31 a barrel. WTI down by 3.6%. Among the names scheduled to report after the close of trading today, we'll be hearing from Broadcom. Its shares down now by 2.4%. Also reporting after the close of trading today, Lululemon. Lululemon shares down now by 3.5%. Recapping, stocks lower, S&P down by 25 points, down 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Just bought some Lululemon, so I helped them out in the quarter. I'm just going to say. All right.
We'll see after the bell. We'll see about that.
We will. You are listening and watching on YouTube, Bloomberg Business Week. Carol Massar, Tim Stanovic. Well, earlier this year, our Bloomberg team reported on how college athletes were finally cashing in on their name, image, and likeness. And our next guest has some thoughts on that.
Yeah, let's bring in Richard Kent, legal counsel and marketing consultant at Sunil. It stands for Student Athlete Name, Image, and Likeness. He's also the author of Inside Women's Basketball and Inside the U.S. Open. He's here with us on site at the U.S. Open. Richard, how are you?
Great to join you guys.
Yeah, it's great to have you here. Hey, I want to get to Sunil in just a minute, but first I want to talk some of the action that we're seeing so far here at the Open. Some big names are here, but some big names aren't here this year.
No Novak Djokovic and no Roger Federer. Roger Federer is my guy. He's my guy.
Okay, he hasn't played in one Grand Slam this year.
He has not. He's playing in the Laver Cup in 2 weeks, which is in London. He's going to play in Basel, which is his hometown tournament in October. He may play the World Finals this year, but I'm told, I don't know how good the information is, all 4 majors next year, a prelim to each major, like in the U.S. Open, it would be Cincinnati, I would think. And the Laver Cup, once again, which is going to be in Vancouver, I believe, and then retire, I'm told, it's possible in Basel.
So if you think that this one, I mean, this is obviously a big one for Serena.
Yeah.
Imagine this next year if it's Federer's final.
You know, I had that conversation with 2 people yesterday, and I keep going back and forth on the noise and all that stuff. I still think, since she's an American, Serena will be a little louder, a little more boisterous.
What do you mean?
The Serena crowd this year, it's just crazy.
Well, you could see it and feel it already.
Yeah, I mean, the Federer crowd, those are the 2. You know, Serena, Federer, Serena. But those would be the 2 biggest retirements for sure.
How do you think about, though, this kind of I hate to say older generation, because these individuals who've been playing tennis for decades now at this point are not really that old, but they are for the game, right? We're thinking about the next generation. How do you see it, and how do you think about who's coming up and who are the players to watch?
I think tennis is healthy. I think Nick Kyrgios is an unbelievable talent. He probably has a better serve than all the people we just mentioned. I think he can do wonders. I really like Madison Keys a lot.
Yeah. Wait, hold on. But Kyrgios on the court is not what one would say is a good example for sportsmanship.
Correct.
I mean, in fact, yesterday, got in a lot of trouble.
He got in some trouble yesterday. I mean, everything's relative in terms of a lot of trouble, but he did.
I watched the video. It wasn't pretty.
No, it was not pretty, but that's probably... Listen.
What did he do, for those who didn't hear?
Oh, excuse me. He spit toward, at one point, and it was totally caught on camera. And then a lot of F-bombs. No other way to put it.
I think that when he gets a major, and he will, under his belt, I think you'll see a different demeanor.
A little maturation?
I think so. I think that would be the maturation process.
Yeah. Tim, you used to swear a lot when you started out in journalism, or so I heard.
Actually, in tennis. I mean, tennis just messes with your head. I was a college tennis. I've played tennis my whole life, college player, and it's really one of those sports that the intensity, it really messes with your head when you're out there.
It's just you. It's just you out there. So
let's talk about what you're doing with Sunil.
Sure. My partner and I, Jason Belzer, who's a lawyer in New Jersey, recognized about a year before the U.S. Supreme Court decided 9-0. Think about it, 9-0.
Yeah.
They couldn't decide that today's Thursday, 9-0. but they decided 9-0 that student athletes are going to have rights. They have the right to get paid. College coaches like Nick Saban make $12 million a year. Coach K, who, as you know, retired at Duke, was making $9 million a year. And Mark Emmert, who did next to nothing as the NCAA president, was making $3.5 million. So Brett Kavanaugh, when he was skewering the NCAA lawyer, I listened to the argument on C-SPAN, as a matter of fact, he was just apoplectic about this. And he's a guy I actually kind of remembered, or maybe I'm making it up in my head, that played JV basketball at Yale.
Okay.
So he's got a sports background.
Right. So had maybe some more sympathetic or sensitivity, if you will, to this issue. I mean, I don't disagree. I mean, these colleges and universities, between the sports rights, right, for all the streaming services or broadcast, they're making tons of money off of all of this. And then you have the athletes who are actually the reason why they're all making money, ultimately.
Let's take Carol Arch Manning, okay? Mm-hmm. Arch Manning steps on University of Texas at Austin's campus.
Yeah. In
September, a year from now. The number that I'm hearing, between 10 and 15 million.
That he's going to be paid?
Yep.
Wow.
Not in a lump sum check.
Okay.
Pay for play is taboo.
Right.
There's 38 states that have legislation. By the way, I'm working with Senator Manchin's office in Tuberville. I haven't worked with Tuberville, but he's co-sponsoring it on federal.
Of course, he has a history in college athletics.
He was a coach at Auburn, of course, yeah. And they want very much for there to be federal legislation for uniformity purposes, so that Alabama does not trump, no pun intended, let's say Michigan.
Right.
Because they have Alabama has a very liberal NIL policy.
Well, just think about the rich teams, right? Or whether it's baseball or whatever, right? That have had really deep pockets, right? And there's been kind of some rules to make sure that it's much more even in terms of the playing field, right?
Correct.
In terms of bidding for players. And shouldn't it be like that on the college level?
Yeah, but there's never going to be a salary cap with college athletics. There's been 8 to 10 lawsuits that have been brought since the Alston decision, and each time the court decided in favor of the student athletes. So I don't see a cap coming.
Okay, really quick, 30 seconds. What would you say to someone who says, okay, I'm worried about the purity of college athletics now?
I'm worried about the purity of college athletics as well. What was under the table once is now on the table. And is it totally pure? No. We try to make it pure at Sunil, but listen, we can't police everything that's going on at every school that we're doing business with.
How do you police it? 20 seconds.
Hopefully the NCAA will finally step in and do something, have an enforcement arm that's looking at this thing instead of completely abdicating, which is what it did.
Yeah. I mean, does it feel like it's just a matter of time that there's going to be something that goes wrong?
We're in the Wild West right now. Those are the words I use with everybody. So will there be a point in time? Yes. If we're sitting here in 3 years, I think it'll be fully regulated.
So glad you stopped by.
I'm glad you had me.
Yeah. Richard Kent, legal counsel, marketing consultant at Sunil, author of Inside Women's Basketball. Yes, and Inside the U.S. Open.
Right.
Connection lost.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Okay, you are listening and watching Bloomberg Business Week. Hi, Bob Bragg. I'm taking a picture of Bob Bragg, but you can't really see. I'm going to send out a video right now.
This is amazing. This is what you call great radio.
Well,
she's taking a video while she's doing radio.
Because I cannot.
You can watch us on YouTube.
I cannot believe the amount of people and how packed it is already.
And this is the first. It was day 4 of the tournament. It's remarkable.
It's early on, and you know what? Guess what? We still have a pandemic, kind of.
We do, and we're going to be talking about that in just a few minutes. We're going to be speaking to David Dowdy, infectious disease epidemiologist at the Johns Hopkins Bloomberg School of Public Health. First, though, Charlie Pellet, give us an update on the markets.
Yeah, well, we have turned around since our last update. We have got the Dow actually higher now. The Dow's up by 45 points, right to the numbers. We'll give you the why in a moment here. But the Dow now advancing by 0.2%. S&P 500 index have been down as much as 1.2%. Right now, it does remain lower, but down by about 0.2%. We've got the S&P lower by 7, and NASDAQ still remains lower on this first trading day of the new month, down now by 1%. The NASDAQ Composite Index does remain lower by 119 points. Bottom line here, stocks are falling for a 5th day, and a measure of the dollar has surged to a record after recent data showed the U.S. economy remained robust last month, even as the Federal Reserve stepped up its inflation battle. Gold is trading down $13 the ounce to $16.97, a drop there of 0.8%. 10-year, 3.26%. The 2-year, 3.51%. Crude, major story today. West Texas Intermediate crude slumping 3.4%, down $3 a barrel, 36.53. The lockdown of the Chinese megacity of Chengdu to contain a COVID-19 outbreak is adding to negative sentiment in the oil market. Traders are also keeping an eye on Europe's energy needs. Amrita Sen is Director of Research at Energy Aspects.
This is going to be a very, very tricky time because Europe, or the EU particularly, has to get rid of at least another 1.3, potentially as much as 1.7 million barrels per day of Russian oil. And that is not going to be easy to replace because you've seen what happened this summer when that volume of oil was still coming into Europe. Every single benchmark went to record highs in terms of the physical market, not necessarily the financial contract. Imagine another 1.4 on average we need to replace that. I'm not sure where we're going to get that oil from.
And today we're looking at oil stocks lower across the board. ExxonMobil, for example, it is down now by 1.5%. BP, the ADR is down 0.5%. Chevron down 1.4%. EOG Resources down 1.6%. Pioneer Natural down 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. Carol Massar, Tim Stenivek, live at the U.S. Open here in New York City. Well, some headlines yesterday. The U.S. FDA okaying the Omicron COVID-19 booster vaccines from Moderna and the Pfizer-BioNTech combination. So it made me think, Tim, okay, do I now have to go get another shot?
That's a really good question because you just had COVID, a few months ago.
Yep.
So We have a perfect guest to help answer that question. Dr. David Dowdy is infectious disease epidemiologist at the Johns Hopkins Bloomberg School of Public Health. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Dowdy joins us this afternoon on the phone from Baltimore. Dr. Dowdy, how should we figure this out? I mean, I'm actually, for people who've been listening all week, this is my first day back at the office. I did go to the office today, but the first day I was allowed out because I was in quarantine for 11 days. I'm probably still testing positive. I don't know.
Yeah.
But do I go, as Carol moves away from me, do I go out and get this this booster now that it's available, or do I have to wait a few months?
Yeah. So great question, and thanks so much for having me. And the answer depends on who you are and your your immune system. If you have a weaker immune system, older, etc., I would prioritize getting the booster. Maybe not within a month of getting infected, but after maybe 2 or something like that. If you're healthy, you can probably wait for a little bit. It's probably not a bad idea to wait for 2 to 3 months until after after your body kind of recovers and resets and is ready for another another dose, I guess.
Yeah, I think I'll have to wait a little bit. Hey, Dr. Dowdy, how should we be thinking about these boosters? Because if you were talking to me, 2 years ago, the beginning of my own infectious disease epidemiology career on Twitter, at the beginning of the pandemic, I would say, okay, well, a vaccine is supposed to prevent us from actually getting sick or getting infected by these things. But what we've learned over the last year and a half is that as different variants have emerged, the vaccine wasn't necessarily doing what a lot of us thought it would do. Right, prevent us from actually getting COVID and even getting sick.
But I didn't go to the hospital. You did go to the hospital.
Thank you. Exactly right. We didn't go to the hospital, and we weren't very sick in the greater scheme of things.
Right.
Is this booster going to prevent us from getting infected, or is it going to prevent us from getting very sick?
Yeah, no. I think you've put it exactly right. These vaccines, even the initial vaccines, are very effective at preventing us from getting very sick, but they're not effective at all against getting infected. I think that the idea is that this new shot will, for a period of a few months at least, provide some protection against infection. And so the idea is that if you get this booster now, it'll give you at least a few months of protection against infection, and maybe that will be enough to get us through whatever winter surge may or may not be coming.
I mean, do we need to be thinking about this, Dr. Dowdy, as the flu? Like, can we equate it with, okay, I'd like to get a flu shot, but I don't feel like I have to get a flu shot every year. I do it because I think
you should, though.
I do get it. I do, but I'm just saying, I'm always like, well, if I miss it, I'm just going to get the flu. Is that where we're getting to with COVID and COVID variants?
Yeah, so once again, I would kind of say this depends a little bit on your underlying immune system and those around you, right? So if you're, again, a generally young and healthy person, it's probably not unreasonable to think of this kind of like a flu shot. But for people who are older, who have compromised immune systems, and their family members and people who come into contact with them, this is not just the flu. And I think we have to be a little bit more cautious still.
But Dr. Dowdy, Carol brings up a really good point, and it's the idea of treating this akin to the flu. And, not everybody gets a flu shot. In fact, I believe the latest data say that not even half of adults end up getting the flu shot. Are you worried that people aren't going to get this booster? They've kind of maybe fatigued? After all, not everybody got, or even close to everybody got, the most recent booster.
Yeah, well, I think it's a given that not everybody's going to get this booster. I think this is really about trying to plug as many small holes as possible, recognizing that no one thing is going to be a silver bullet, right? And so, if we can get 30, 40, 50% of the population to get this booster and to have that protection for a few months against getting infected with the most recent variants, then that might be enough to take the edge off of whatever we're going to see this winter.
Hey, Dr. Dowdy, 20 seconds. Are you still thinking about COVID, or are you thinking about the next virus that really takes us down, just very quickly?
Still thinking about COVID. I think it's a little too early to think about the next virus, but I think we'll have to see what the future holds.
Fingers crossed. Dr. David Dowdy over at Johns Hopkins Bloomberg School of Public Health and infectious disease epidemiologist.
All right, let's go to Washington, D.C. for world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. We're waiting to find out if a Florida judge will appoint a special master to review the documents that were taken from former President Trump's Mar-a-Lago home. Trump's legal team says it would allow for personal information to be separated from the materials and returned. But the Justice Department says the appointment of an independent inspector could compromise national security. In a move that could affect supply chains globally, China has shut down the city of Chengdu because of a COVID-19 outbreak. Bloomberg's Enda Curran says it's a city that plays a large role in commerce.
It's a reasonably important industrial hub. It's known for auto production, electronics production, makes up about 2% of GDP. Also popular with tourists, by the way. It is a very popular panda sanctuary over there. And it speaks to the idea that China is just so determined it's not letting go yet of this COVID-0 strategy.
Bloomberg's Enda Curran, Chengdu has seen 900 COVID cases in 10 days. A danger of another kind has brought UN inspectors to the Zaporizhzhia nuclear power plant. Rafael Grossi, the head of the International Atomic Energy Agency, says they're concerned about the stability of the plant as fighting rages around it. He'd like inspectors to stay a while.
I am going to consider the possibility of establishing a continued presence of the IAEA at the plant, which we believe it's indispensable to stabilize the situation and to get regular, reliable, impartial, neutral updates.
Grossi says while at the plant, they'll conduct nuclear safety and security activities. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. All right, we're just checking in with Dr. David Dowdy over at Johns Hopkins Bloomberg School of Public Health. He is an infectious disease epidemiologist, still worried about COVID, but giving us some guidance about the next booster shot or vaccine, right, for the Omicron variant.
Yeah, Carol, it reminds me of the conversation that you and I have been having over the last year and a half, which is it's going to take years for us to understand the full effects of this pandemic, not just from a health perspective, especially people early on not going to the doctor because they're worried about concern, but also the effect on kids, the effect on education after, in some cases, more than a year of lockdown.
My daughter and I were talking about this. I just took her back to college, and she was feeling sorry for some of her friends who are now seniors, but just how much they missed.
It's like they missed half of their college, right?
That's exactly what she said, and we were talking about younger kids. So a new report released today reveals how much pandemic-related schools disruptions have really wreaked havoc on American students' learning.
And the analysis is from the National Center for Education Statistics, and it found that fourth grade reading and math scores dropped by the largest margin in over 30 years, an average of 5 and 7 points each. It was the first decline ever in math and the biggest in reading scores back 30 years. All races and ethnicities lost ground, Carol, but Black and Hispanic students fared the worst with an average drop of 6 points in English and 13 and 8 points in math, respectively.
Yeah, acting NCS Associate Commissioner Daniel McGrath calling the scores, quote, some of the largest declines we have observed in a single assessment cycle in the NAEP's 50-year history. He added that students are currently testing at levels from 20 years ago. This is not good. I'm seeing with schools where, they took kids back early to try and make up some ground. Did you and I talk about this? Maybe I talked about it.
With Paul.
With Paul, sorry.
Yeah.
I've had so many different co-hosts.
It's okay. I know we're not the same.
You're not. No, but you do think about the significant setbacks socially as well as academically, especially for younger kids.
Well, this comes after yesterday's news where that report found that the life expectancy here in the U.S. has declined again for a second year in a row.
Because of COVID?
Because of COVID.
And the impact. Well, you think about people who didn't go to the doctors, put off procedures, and just the impact of COVID.
These are all indirect effects.
Yeah, and we're still, I am marveling at the amount of people who are around us here at the U.S. Open. We have not been here for 2 years because of COVID.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks have trimmed losses. It does remain a down day. The Dow giving up earlier gains, now down by 14 points. Moments ago, it was up by about 14. We've got the Dow down less than 0.1%. Little change there. S&P 500 index on the minus side as well. The S&P down now by 14, a drop right now of about 0.4%. NASDAQ Composite Index lower by 129 points. NASDAQ is down right now by 1.1%. Bottom line here, stocks are lower for a fifth day today. We've got the 10-year yielding 3.26%, the 2-year 3.51%. Gold down $15 the ounce to $16.95, a drop there of 0.9%. Crude, a major story today. West Texas Intermediate down 3.6%, 86.37 a barrel right now on WTI, a drop there of $3.18. So again, recapping, first trading day of the new month. It is a down day. S&P lower now by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for the update. Well, the new issue of Bloomberg Business Week, it is out. This week's remarks in the magazine also happen to be the issue's cover story. It gets into President Biden's sweeping package of student debt relief, and as Bloomberg opinion editor Ramesh Ratnasar writes, how the bailout doesn't address the fundamental problem of really what's going on.
Let's get more from Ramesh joining us on the phone from our Washington, D.C. bureau. He's a member of the editorial board covering national security, education, and immigration, a former State Department official in public diplomacy, and the author of Tear Down This Wall, A City, a President, and the Speech That Ended the War. Ramesh, great to have you with us this afternoon. I've been thinking a lot about this. This decision came last week, and it created a lot of tension, I think, online. There was a lot of debate about it. And one thing that I've been thinking about, and I'm so glad that you wrote about this, is the fact that it doesn't fix the problem at its core, which is that education in the U.S. is so expensive.
Yeah, that's exactly right. I mean, I don't want to understate, the impact that loan forgiveness is going to have for, a lot of Americans, particularly, the people who, were on Pell Grants, received Pell Grants. So these are low, middle income students, who are in many cases going to see their debts completely wiped out. That's life-changing for a lot of them. But, the underlying issue remains, which is we have a system in which, in order to have a good paying career, people feel they need to go to college, whether that's 2 years, 4 years. And for an increasing number of those people, the gains of going to college just don't match the costs of doing so. And that's what's putting them in a position where they are leaving with debt that they can't repay. That's what caused this bigger crisis. So forgiving debts, it's going to help some people. It doesn't really solve the problem.
You're preaching to the choir. I got to tell you, Tim and I talk about this all the time. He's got a little one. I've got a daughter who's just starting her sophomore year in college. I am blown away by what the cost of college is, the range. And I look at some of the numbers in your story, Ramesh, and I'm like, what schools are you talking about? Because most of the schools that we've looked at were starting it from 60
private schools
all the way up to 80,000, and even so-called
for 1 year.
But even public schools,
right,
kind of your top tier, it's $50,000-$60,000 easily. So how did we get here? Because schools say, well, wait a minute, we've got to attract teachers, we've got to attract facilities. I want my daughter to learn. I don't really care if it's the newest gym that she's playing in.
Yeah, well, there are a lot of factors. There is certainly there's been underinvestment in public institutions, really beginning with the Great Recession, and the bargain has flipped, whereas government for a long time basically picked up most of the tab of the cost of college. Now that's been basically flipped over to families. The student loan system exacerbates the problem because basically it provides a subsidy to institutions and removes any incentive for them to lower tuition so that people can afford it, because you can just take out federal student loans that the federal government covers, and institutions, colleges don't really have no skin in the game. And what we have seen, yes, that in order to attract students, they have invested a lot of money in improving the student experience in amenities, facilities, not necessarily instruction and research, and that's all contributed to driving up these costs to the levels that we're seeing.
Yeah, the food at my college was really good.
Was it?
Oh yeah, and my parents were like, "This is ridiculous. Like, why is this food so good?
Well,
it shouldn't be this good."
And Ramesh, I will say, taking my daughter back this week, and they, built out a new facility, and they're doing a lot of work. And part of me was like, "Oh, this is great that they're investing, in the school." But I also just, what's the justification for tuition costs and college costs, outpacing inflation by a mile?
Yeah, I mean, basically, outpacing virtually every other service in our economy. I think one thing that's important to point out is that for students who attend the most selective colleges, so these are colleges that accept less than 50% of applicants, but it's a very small percentage of the overall student population, the return on investment over your lifetime is still pretty good. It's still probably going to be worth your while if you get a degree from one of those institutions. The problem is that's not where most people are going to school. And what you have is the vast majority of Americans who are going to colleges and programs that just are not delivering that return. And even worse, a third of people who enroll in college never get their degree to begin with. And it's really that cohort that is sort of at the heart of the crisis of student loan debt.
Well, Ramesh, what I really like about your piece is that it ends on, I don't necessarily want to say optimistic, because there's a lot that has to get done for this to improve, but the word you use is aspirational. And let's say that members of Congress got along with one another and that everyone was on the same page when it came to higher education, and they had the ability...
I'm sorry, you lost me at members of Congress getting along with one another.
But I guess my real question is, if you could wave a magic wand and fix this, what would that look like? What's that aspirational element that you write about?
I think the big thing that needs to happen is there needs to be more innovation in the system. Consumers need more choices. The old traditional model is just not working for enough students. And so, we are way behind other countries when it comes to apprenticeships, work-based training programs, the kinds of things that give people an alternative to having to go to, 4-year universities, try to get a bachelor's degree of unclear value. We need more post-secondary programs that are really geared toward giving people skills that they can take to the marketplace.
Right, like they do in Europe. I always kid everybody, Ramesh, when I'm on air, but I'm like, I remember my plumber, and I talk about this all the time, plumber or electrician, I can't remember, but had so many investments in real estate, like retired early, was just making so much money. And as a society, we don't value, but why not? Because they make a good living and they're highly skilled.
You should see how much they charge these days now.
That's right.
So those services have gotten so much more expensive. It's remarkable.
Ramesh, really thoughtful story, and I feel like one that we've got to figure out a better way in terms of what this costs. Ramesh Ratnasar, he's editor at Bloomberg Opinion, joining us on the phone from our bureau in the nation's capital.
You're listening to Bloomberg Business Week. Carol Massar and Tim Stenevec. We are live from Flushing Meadows, New York at the 2022 U.S. Open. And you're listening to Bloomberg Radio.
It's going to cost you $3 million to send your kid to school.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are lower for a fifth day as we move into the final hour of trading on this Thursday, September 1st. The Dow, the S&P, NASDAQ, they are trading mixed right now. We've got the Dow higher by 18 points, little changed, up less than 0.1%. The S&P 500 index down now by 11, a decline of 0.3%. 1% drop right now for the NASDAQ Composite Index, down 123 points. Stocks fell for a fifth day, and a measure of the dollar surged to a record after recent data showed the American economy remained robust last month, even as the Federal Reserve stepped up its inflation battle. Phil Orlando at Federated Global sees stocks heading back to the June lows.
And so we took some more chips off the table, a fortnight ago, and our view is that 19% rally, we're going to retrace some or all of that over the course of the next month or two.
U.S. manufacturing had a seemingly lackluster month based on fresh industry data. With that story, here's Bloomberg's Vinny Del Giudice.
The Institute for Supply Management reports its national factory index hovered at a two-year low in August as production slowed. Beneath the headline, though, some glimmers of good news. A gauge of factory employment rose to a 5-month high, even with persistent labor shortages. What's more, a measure of inflation moderated. Vinny Del Giudice, Bloomberg Radio.
NVIDIA shares down the most in more than 2 years after warning that new rules governing the export of artificial intelligence chips to China may affect hundreds of millions of dollars in revenue. NVIDIA down now by 8.8%. Cathie Wood's fans turned tail last month, pulling out the most money from her flagship fund in nearly a year as it continues to flounder. ARK, the ARK Innovation ETF, lowered today by 2.1%. Recapping stocks mixed, S&P down 6, down 0.1%, and that's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, yes, indeed. Bloomberg Business Week. We're live at the U.S. Open and the Billie Jean King National Tennis Center here in Queens. It's really a mecca for tennis fans. You know that. One that continues to evolve to support the player and fan experience. And Tim, that often means renovations and building anew, and our next guest understands that process really well.
Yeah, Sid Davidoff is founding partner at Davidoff, Hutcher and Citrin LLP, also chair of their government relations practice, having worked on major development projects in New York City. He was an administrative assistant to New York Mayor John Lindsay for 7 years. Sid, here with us on site at the U.S. Open. Sid, how are you?
I'm great. This is a fantastic day to be here.
Do you come every year?
I'm sorry?
Do you come every year?
Every year I have a box. I've had it for, I guess, 30 some odd years, maybe more.
How do we get a box?
Pay.
Yeah, okay. That's what I thought you were going to say.
Isn't it nuts,
you don't
though,
have to...
this year? It's packed.
Well, this year, because it's Serena.
Yeah.
You know, every once in a while, something comes along like a Serena, and it just blows out of the water, so...
Did you think 25, 30 years ago, when you were negotiating the construction of Arthur Ashe Stadium, that you would have an event, that the U.S. Open would be like this? That someone, I mean, look, Serena was playing then.
Right.
That's pretty remarkable,
It is
right?
remarkable.
25 years.
Yeah.
You know, it's interesting. I was sitting in my box, and saying, I want to represent this organization. It's going to be, this is the biggest thing that's ever happened in New York. And at that time, Dave Dinkins was mayor, and he wanted this stadium. And Dave was an incredible tennis enthusiast and really backed young tennis players, particularly black young tennis players. And they were talking about leaving the city because they didn't have a big enough facility for the U.S. Open. And I said, I got to get involved. And I made a couple of calls. I was fortunate, and they retained me, my firm, and we spent the next 3 years getting the permissions, because it's interesting. This is parkland, and anything that happens in parkland requires the community board involvement, the borough president, the city council, the legislature, and the governor, because you're alienating park property. It has to go through the state legislature.
None of this was here.
Well, no,
just the one, right?
The Louis Armstrong was there.
Right.
But it was all about Arthur Ashe.
Yeah.
There were 16 courts. Now you got to remember, 48 weeks out of the year, average people, juniors, seniors, are using the best courts in the world. So it's a fantastic thing. But they needed more room. So it was a negotiation. It was 3 years. Part of it is what we're seeing here today. All these people out here would just have day passes. It was required that they would have a minimum day passes for people who can't afford the seats in the stadium. If I can, I'd like to tell you a story about Arthur Ashe.
Sure, please.
So we had to go to the 4 community planning boards that circle and involved with the Flushing Meadow Corona Park. And Arthur Ashe said he wanted to come and convinced them that it was the right thing to put this stadium here in this park. And he told the story of him growing up in Richmond, Virginia, where he was playing in a public park and he was mentored. He would never have been able to be who he was in tennis had it not been for a public park.
Mm-hmm.
And when he won the U.S. Open at the Westside Tennis Center in Forest Hills in '67, he couldn't be a member of that club. So he won the Open at a club that he couldn't be a member of. And he would tell that story of this kid growing up, and anybody who had any doubts that this facility belonged in this park, that ended it. It was incredible. And he's such a gentleman. And to be here in the stadium named after him, seeing Serena playing it last night, I got to tell you, it's thrilling. And it is the best deal of any arena in the country. The money that comes to the city with no expense to the city.
I want to make sure I understand this. Arthur Ashe died in 1993.
Yes.
So this planning for this was that long ago?
Yes, it was.
1990s.
It was, no, he didn't die in 83.
93, yeah.
David Dinkles was mayor from 89 to 93.
Yeah.
And it was his final act at this east side of the stadium. And Arthur was out there already suffering, but you couldn't tell. That brings back, he making me a lot of memories of being there. But so the question was, did I ever think it would be like this? I never doubted it would be incredible. Did I think it would be multi-incredible? This is it.
So you talk about three years of negotiations?
3 years.
So what was the most difficult part of that? I can only imagine, because major cities are very protective of their parkland space, as they should be, right?
They should be.
Because it is open to all communities, and it's just important to have this open space. What was the toughest negotiating point?
The toughest, and it was the craziest, because there was definitely a group on the board of the USTA that didn't think that New York audience was the forum for the U.S. Open. We're talking about Atlanta, we're talking about Chicago, certainly not New York. They didn't like who sat in the bleachers, whatever the reasons were, and they wanted to leave. There were any excuse to leave. So the issue then became the flyovers, the planes that land at LaGuardia, a stone's throw from this tennis stadium.
Mm-hmm.
Now, I happen to be a pilot, too. I have a pilot's license, and I know a lot about flying. And I kept saying, wait, nobody, this isn't a big issue. But they said this is a big issue. So at the time, Al D'Amato was the United States Senator. He actually held up the appointment of the head of the FAA, which the Senate has the right to do, until they agreed that the planes would not fly over during the tournament. And the interesting thing is, it was a mayoral election. Giuliani was running, hated the stadium, hated Dinkins, obviously, and said that this is a lot of history.
Yeah.
That said that this would be a safety factor. Now, anybody who flies knows anything about planes. When the guy in the tower tells you where to fly, you fly.
That's right.
And he said this is going to cost the city money. And the deal was that if there were 5 incidents in 1 hour where a plane would fly, where it was an emergency, where they not following the rules of the tower, then there was a fine or an abatement of the rent. It couldn't happen.
Yeah.
And I remember, do I have to stop?
Just about 5 seconds.
That was the biggest.
Okay. Really cool stuff. Love the history. Love to hear the origins, especially as we look at what this facility is and how many people it belongs in New York. Sid Davidoff, thank you so much. I really appreciate it.
Let's get to World and National News with Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. Joe Biden's White House wants voters headed into midterm elections to think more about the threat he believes Republicans pose to democracy and less about the complicated state of the economy. He will be holding a primetime speech tonight from the Philadelphia site where the Constitution was signed. White House Press Secretary Karine Jean-Pierre says the speech will be about battling for the soul of the nation.
What the president believes, which is a reason to have this in prime time, is that there are an overwhelmingly amount of Americans, majority of Americans, who believe that we need to save the core values of our country.
Again, Karine Jean-Pierre previewing tonight's speech. In recent speeches, the president has portrayed the GOP as still under the spell of his predecessor, Donald Trump, and his false claims that the 2020 election was fraudulent. A team of UN inspectors is working at a nuclear plant held by Russian forces in Ukraine, even as shelling reported in the area threatens their mission. The aim of the inspectors is to safeguard Europe's biggest nuclear power plant. National Security Council Coordinator for Strategic Communications, John Kirby, spoke to Bloomberg today about it.
We're glad to see that. We hope that they're given unfettered access, and we look forward to their report about the safety and the operational efficiency of that nuclear power plant.
Kirby says any damage to the plant would pose a risk not only to Ukraine, but also to the entire region. He says there needs to be a demilitarized zone around the plant, but the U.S. would not be taking an active role with that. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nan, thank you so much. Carol Massar, Tim Stenivek, live at the U.S. Open in Flushing Meadows, New York. And still with us is Sid Davidoff, founding partner of Davidoff, Hutcher, and Citron, chair of their government relations practice. He's worked on major development projects in New York City, including the Arthur Ashe Stadium decades ago. The U.S. Open brings in a ton of money to the city, doesn't it?
Yeah, the last estimates I heard was about $700 million come in for the 2 weeks of the Open. From the money that's brought in at the gate, the money that's spent at the restaurants, the money that's spent in hotels, Ubers, cabs, etc. The city gets a piece of everything. That was the negotiation. They get a piece of the television money, a piece of the...
Was that the negotiation from day one?
Yeah, that was part of the deal. And that was one of the reasons that, that held it up a little bit, because it was a big money thing. But it was important to the USTA into how much they gave away. But it involved a lot of money, and it was certainly worth it. And today, and it's been said by many, looking at any stadium in the country, this is the most profitable to any municipality without any hard money being put in.
That's remarkable, because the tournament is 2 weeks a year.
Exactly.
So how does that? So it's so much better than football stadiums in other parts of the country?
Yes, and if you look at what they pay, they have all their maintenance is taken off, like Citi Field, Yankee Stadium, whatever it costs, they take it off their rent. This is a net lease. USTA runs it 52 weeks of the year. They close it down for the 4 weeks, the week after the tournament, week before, week after. Pay for everything all year round. City gets a piece of everything.
Could you ever kind of replicate this? Just real quickly, just got about 20 seconds.
Too much greed in the industry. This is one that's...
You mean
really
the sports
special.
industry?
Yeah.
That's interesting to hear that. Sid, thank you so much. Really appreciate it. Favorite player, real quick?
No.
Oh. That was real quick. Sid Davidoff, founding partner of Davidoff, Hutcher, and Citron, joining us here at the U.S. Open. Carol Massar, Tim Stenivek, we are live on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are trading mixed. We have got the S&P down for a fifth consecutive session. The Dow is higher. Lots going on. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading well off their session lows, with the Dow currently up 50 points, was down 290. S&Ps are currently down 3, while NASDAQ pares losses to 80. The U.S. 10-year yield at 3.25%. Gold is down 15. Oil is sinking, and Bitcoin is trading lower by 1.7%. Among the main 11 S&P sectors, leaders were utilities, healthcare, and consumer staples. Energy was under pressure, and leaders to the upside in the Dow, Merck, J&J, and Amgen, while Boeing fell 4.5% and led to the downside. After earnings, Okta plunged 30%, and in other news, NVIDIA fell 8% after a new U.S. rule threatens chip exports to China. And wrapping things up, Broadcom and Lululemon both report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, Tim, we're going to just take a step back from the U.S. Open for just a moment, because I don't know if you remember, we used to talk about DINKs, double income, no kids.
Oh, yeah.
Young couples didn't have kids, both were working, how much disposable income they had, and so on and so on. Well, in 2022, we've got kind of a take on that, perhaps. And it's a Bloomberg story about how U.S. women who stay single and don't have kids.
Connection lost.
Yeah, Molly Smith is economics editor for Bloomberg News. She's with us on site right now at the U.S. Open. She's actually, a little secret, taking the day off and just spending the day at the U.S. Open. But we saw her. We know that she wrote this story. It's a really good story, so we wanted to, get her to take a break from her vacation day to come hang out with us.
Because she loves tennis, play tennis.
I do.
Yeah. Before we get to your story, Molly, this is what, your third day that you're taking off to be at the U.S. Open?
Third in a row.
That's great.
Ben really likes
right,
tennis.
well,
I should sleep here.
You should. Tell your boss that you're working today, though, because you're on Bloomberg Radio talking about your economics piece.
Hi, Spot. In case you can hear me.
All right, so tell us about what's going on with women.
So I was really inspired to write this story by many of my friends who live this lifestyle. They're in their early 40s. Some of them are divorced, some never married, and have just never really wanted children. That's never been part of their life's vision. And I wanted to just bring some real justice and service to that topic, because I think a lot of women, when they say they don't want to have kids, are kind of judged and looked at like, oh, weird, like, why? And it's very, it's almost thought of as like a shameful decision.
Like,
and
what's wrong with you, right?
Exactly. And they really take pride in this, that's just not the life that they want, and there's nothing wrong with it. And they have advanced in their careers. They own at least one or multiple homes, including apartments in New York City, and they're doing amazing personally and professionally.
Well, let's talk about a couple of those women that you profile in here. Ashley Marrero is one of them, and Anna Dixon, actually a woman I used to work with earlier in my career. I was surprised to see her picture in this story. What did they tell you about their choices and how it's sort of given them this freedom to kind of drop everything and just go off to Alaska or something?
Exactly, yeah. And they have a group of like 25 friends who are just like this. It's really incredible to see. And for Ashley, she was married when she was in her early 20s, and I think she just felt very held back by it. There were so many things that she wanted to go out and do, but didn't feel like her marriage really gave her that freedom and opportunity to do it, like to get up and do these trips or go buy the beach house. And with Anna, I think it was this idea that just kids were never part of her plan. She's, had a partner for a lot of her life, but is just not interested in raising children, and is very happy and resolute in that decision.
Molly, was it a case of, yes, they thought they would get married and have kids and do that whole thing, and it just didn't work out? Or is it that it wasn't a driving force from the get-go?
I think they thought more about like marriage could be in the picture, but less so kids. And Ashley even says to this day that if she were to meet somebody and get pregnant tomorrow, that she would have a child, but it just hasn't been something that she's actively pursued on her own. And especially since she's not in a committed relationship right now, she has her eggs frozen. Is she really going to act on that when there's, no one right now who's seriously in the picture? So that's just not part of her plan.
It's interesting because
Tim and I talk about with a lot of our guests about equality between women and men, just basic equality in the workforce. And I'm always kind of like, as long as women have kids, they're never going to have that equality because physically they're going to be out of the workforce. They're going to be looked at differently, even if they go home for just a week and then go back to work. And I do wonder, so financially, these women who've either made the choice or whatever, they really are financially wealthier than maybe if they had gone a different route with kids.
I mean, it's hard to imagine how they how it wouldn't be, right? I mean, Ashley, for her job, is on the road a lot. She's a sales rep for a medical device company, so she's in the OR, she's with patients, traveling around to meet doctors, and she owns a one-bedroom in the West Village, but if she had a child, she'd probably need a live-in help. Like, I mean, to do that on just her income would still definitely be challenging.
The other part of this story, too, has to do with how expensive it is to raise kids.
Yep.
Look at the opportunities that these women have financially because they don't have to put money in a 529. They're not paying for daycare. And it just, in the U.S., and you write about this, birth rates are declining and people are having kids later in life. Is there a lesson in here for policymakers?
I mean, it's so mind-boggling to me about how this, it's just, there aren't systems in place in the U.S. to really support parents. I mean, how much I'm sure you guys have talked about it with all of the controversy around the overturning of the Roe decision, and that the U.S. is the only wealthy country that doesn't guarantee paid leave to new parents, that it's challenging. And it's honestly, for so many people whose jobs don't afford that, it's really unattainable.
I love the kind of subline on this is foregoing marriage and parenting has a bigger payoff for American women than men. So even men who don't get married and have kids, women are finding a bigger payoff.
That's right. Yeah, the St. Louis Fed research showed that single women without children had an average of $65,000 in net worth, while as single men without kids got $57,000.
That is telling. What?
30 seconds left. Tell us about the response that you've gotten after writing this. I mean, I saw Anna share this on LinkedIn and so many comments and likes.
It's been overwhelming. I think what's I've really appreciated is the response that Ashley and Anna have gotten and how many women have reached out to them and said, hi, I'm at this similar point in my life. I'm trying to come to terms with it. Can I talk to you? And that's really just a beautiful thing to hear.
Well, it's incredible reporting, and again, it's choice, right? And being able to do it, but you look at the financial impact. Molly Smith's going to stay with us. She's economics editor at Bloomberg News. She's on site with us at the U.S. Open. And because we know she likes tennis, we want to talk a little bit about the Serena effect with her. We're going to come back and do that. Will you stick around?
Yeah.
Maybe grab some honey deuces. $22 each.
We're here.
You are listening to and watching Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. And Bloomberg Business Week is at the U.S. Open. We're going to talk about the Serena effect.
Yeah, we're seeing that on full display right now. That in a few minutes. First up, though, a check of these markets. Less than a half hour to go in trading. Charlie Pellet.
Thank you very much, Tim. Thank you very much, Carol. Here's what's going on. In the red now with the Dow, the S&P, and NASDAQ all declining. Stocks lower for a fifth day. A measure of the dollar surging to a record after recent data showed the U.S. economy remained robust last month, even as the Fed stepped up its inflation battle. The two-year yield right now, 3.50%. The 10-year yield, 3.25%. S&P is down 13, a decline of 0.4%. The Dow down 28, a drop there of 0.1%. NASDAQ down 119, a drop there of 1%. The Dow and the S&P have been fluctuating between gains and losses. Spot gold down $15 the ounce at $16.95, drop there of 0.9%. Big move for West Texas Intermediate crude. Big defined as 3.55%, down $3.18 a barrel, 86.36 right now on WTI. Wall Street traders and investors, economists, and Bloomberg News looking ahead to tomorrow morning's jobs report, 8:30 a.m. Wall Street time. Applications for unemployment insurance fell for a third week to a two-month low, down by 5,000. Blarina Urici is U.S. fixed income economist at T. Rowe Price.
What we've been hit time and again is with this surprising resilience in the labor market and surprisingly strong momentum. Right now, I'm not seeing a lot of weakness in the labor market that would make me feel like a rolling over is imminent. So when I look at the payroll report coming out tomorrow for August, I would expect a significant slowing in the pace of job growth versus July.
Meanwhile, 3M planning to eliminate jobs as part of a broader cost-cutting drive in response to the slowing economy. This according to internal communications. 3M shares are higher now. They're up by 1.1%. Broadcom, Lululemon will report after the closing bell. Broadcom down by about almost 2%. Lululemon down by 2.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I do love how you say Lululemon, Charlie. All right, Charlie Pellet there. Hey, we're going to talk about the Serena effect, as in Serena Williams, because, man, a huge audience tuned in on Monday night to watch what could have been the last singles match of her decorated career. We know it's not. And then we've got doubles with Serena and Venus tonight, and then Serena's going to keep on playing.
Yeah, Friday night. It's expected to be... Did you see the tickets for that?
Nah.
I mean, try to get one ticket. It's over $400.
I got a badge that gets me in, so I'm not worried about ticket prices right now.
Over 400 isn't going to get you very good seats, Tim.
It's not even
I think
a good seat.
4,000 is going to be a lot better.
All right, well, let's dive into the economics of this.
We're going to find out about this.
That voice you're hearing is economics editor Molly Smith. She's still with us on site here at the U.S. Open. I also want to bring in Martine Paris, U.S. consumer reporter at Bloomberg News, joining us on the phone from San Francisco. Molly, I want to start with you because you wrote about the costs associated with the U.S. Open. Everything is more expensive, but there's this different effect happening this year, the Serena effect. Talk about ticket prices because they're off the charts.
Yeah, it's really just reflected in the matches that, of course, Serena might be playing in, which have been the so far Monday, Wednesday night, and now Friday night sessions at Ash, which are just, I mean, I don't think there's an empty seat in that whole stadium. There's 25,000 seats in there. There's no way one is untaken. And yeah, she's going to be playing tonight with her sister Venus in the doubles. Remarkable. There's never been a doubles match this early on the tournament, on Ash under the lights.
All right, Martine, come on in on this. I'm thinking about getting a honeydew as soon as we're done with this. What's it going to set me back?
Oh, my God. Well, it's up 10% this year. It's costing a stiff $22 per drink, but I understand you get to keep the souvenir cup. Is that right, Molly?
That's correct. And you can either get a regular drink on the rocks or a frozen one.
Oh, my gosh.
So no refill, though, for less money?
Definitely not.
Okay.
But Martine, this is going up. I mean, we're having some fun about the impact of Serena, and it is certainly impacting ticket sales and the cost of it in those matches, no doubt about it. But, I mean, inflation is hitting the U.S. Open just like it's hitting the rest of the world.
Yeah, double-digit inflation. That's right.
Yeah, it's pretty remarkable seeing this, Martine, because it's an expensive event to begin with. You know, food costs a lot here. And hotels are more expensive around here, too. Talk a little bit about just, you know, we talked to Sid Davidoff earlier about the economic effects, hundreds of millions of dollars that come to New York City, Martine. What are some of the other costs that you found that have gone up in relation to the U.S. Open?
Yeah, well, we talked with the U.S. Tennis Association, and they told us that they were seeing an increase in their food costs in the 15 to 20% range, but that they were trying not to increase prices to attendees by more than 10% wherever possible. We had also inquired around about hotel costs in the area, and some were reporting rate hikes of 20 to 25%, depending on the day and who's playing. So, yeah, it's hit the U.S. Open just like it's hit every other part of the economy.
And what's the average ticket costing?
Well,
I mean, it really depends on what round you come.
Okay, I'm sorry. Yeah, Martine, what did you hear?
Oh, I'm sorry. I checked in with Game Time this morning, and they were saying that following Serena's win last night, the lowest price seats on their reseller website went from $321 to $435 this morning. So, Tim, you weren't far off about the getting in on a $400 ticket. You win on that one. The most expensive seats went from about $7,000 to $9,000 on Game Time.
Wow. Okay, what about celebrities here?
Yeah.
Molly, have you seen any walking around? I see a lot of them on TV when they're watching, and it seems like the Serena matches are the place to be seen, whether you're a former president or a very famous golfer.
I mean, I personally have not seen them. I think their tickets are, you know, like Martine just described, in a different bracket than mine are.
They have a different entrance, maybe.
But you do find when you go in to watch a match. Martine, go ahead. Come on in.
Oh, I was just going to tell you guys, I mean, most of the celebrities are sitting in Serena's box. You know, they were there by invitation like Tiger. But I just wrote an article overnight, actually. It went live at 1 a.m. Because I was counting up all the celebrities at the game last night. And, you know, so who was there? Zendaya, Jared Leto, Laverne Cox, who was mistaken for Beyonce, Bella and Gigi Hadid, Dionne Warwick, Anna Wintour, Hugh Jackman, Queen Latifah, and Spike Lee, among many others. So, yeah, it's been a star-studded occasion. The most fascinating I found was the fact that Bill Clinton showed up with Dr. Ruth Westheimer. So,
I love that.
Don't you wish you were a fly on the wall next to the two of them and just the conversation?
Oh, my God. And actually, in the article I posted last night, I have the video of the two of them, you know, talking among themselves as they cheered on Serena. So, yeah.
Well, you can feel the excitement, right, Molly, walking around?
Oh, it's been thrilling. And the celebrities, to me, are more the tennis players that probably no one else knows who these people are. So I've been very entertained.
Sitting with Molly, she's like, wait, that's so-and-so player. That's so-and-so player. I want a picture. Martine Paris, U.S. consumer reporter at Bloomberg News. And, of course, Molly Smith. She's our economics editor here at Bloomberg. Thank you.
All right, from New York City to Washington, D.C. for World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. A federal judge did not rule from the bench today after hearing arguments on Donald Trump's request for a neutral third party to review documents seized from the former president's home. The Justice Department says Trump has no right to such a review. The judge says she'll issue a written order at a later time. President Biden will be addressing the nation tonight in prime time. Bloomberg government's Jack Fitzpatrick says Biden wants to focus on the importance of protecting our democracy.
I don't think there's going to be a specifically new message, but the fact that he is taking this on the campaign trail, giving a primetime speech, and making this, it was seemingly a central aspect of his focus on the campaign trail heading toward the midterms, I think is very significant.
Bloomberg's Jack Fitzpatrick says Biden is using symbolism to boost his message, speaking tonight from Philadelphia's Independent National Historic Park, where the Constitution was signed. Thousands of asteroids as big as the Washington Monument are zipping around our solar system at 40,000 miles an hour. Congress wants NASA to find them. The Biden administration says it can wait.
First, the odds of one of these objects crashing into the Earth are minuscule. Still, Congress told NASA to find 90% of them by 2020. So far, they found about half that. The Biden administration has proposed delaying the launch of an infrared space telescope by 2 years and sharply cut its budget for next year. Congress is pushing back, and the debate could flare up as the September 30th government shutdown deadline approaches. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. You are listening to and watching Carol Massar, Tim Stanovic. We're live at the U.S. Open in Flushing Meadows, New York. Just catching up with our Molly Smith, who's also a fan of tennis. But I have to say, I know I've said this a million times, but it's just remarkable. The rush of people early in on this tournament. This is, four days in?
Yeah, we're on Thursday. Started Monday.
And I am just blown away about how crowded it is, how many people that we are seeing around us. It's incredible.
I've been to the U.S. Open a few times before, maybe 3 or 4 times in the past.
You were here just before the pandemic?
Yeah, a couple of years before the pandemic,
Okay.
probably 2017, 2016. But I never worked here. You know, I never did a broadcast from here. You've done this for years. Is this more crowded than you've ever seen it before? I mean, is this like a completely different picture?
Yeah, it's pretty intense. It's really packed. And we were here certainly 2019 and before that. So just the density of the population. It's crowded usually, yes, but this just seems nuts. This reminds me of like when we were done with our broadcast at 5, and I might stay around, maybe watch a little bit, but then start to leave as the evening gets underway and everybody comes in for the evening matches, and that's when I feel like it would get really packed.
Are you going to stay for the evening matches this year?
I don't know. I would like to. I mean, tonight.
Yeah, tonight doubles.
It's gonna be. I gotta see if I can get in.
I don't know. Maybe your media pass might get you in. I don't know.
It might be.
Yeah, it might not.
Even those media tickets go quickly.
That's true.
You've got to reserve them. In the meantime, while we're talking sports, just got a few seconds left here. We do want to mention Redbird Capital Partners completing its purchase of Italian football club AC Milan with the parent company of the New York Yankees joining as a co-investor on the deal. I love this. Just the investor enthusiasm when it comes to, dare I say soccer, but football.
Yeah, I mean, look,
Football
all
over
sports
here.
in general, alternative asset managers have flocked to sports franchises, particularly European football, as leagues have loosened ownership restrictions, Carol.
Yeah, the returns on some of these sports franchises are off the charts. All right, you are listening and watching Bloomberg Business Week on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. First trading day of September. We are on track for another losing session, 5 in a row for the S&P 500 index, down now by 9 points, down by about 0.3%. Well off session lows. At the worst level of the day, we did have the S&P down by 1.2%, but right now the S&P is trading lower, down 0.2%. The Dow swinging between gains and losses, up now by 5 points. Little change there. Nasdaq does remain lower by 0.8%, right now down by 100 points on Nasdaq. 2-year yield 3.50%. We have got the 10-year yield 3.25%. Spot gold down $15 the ounce to $16.95, a drop there of 0.9%. West Texas Intermediate crude selling off by 3.5%, 86.41 for a barrel of WTI. So ahead of the jobs report tomorrow morning, the Dow, the S&P, Nasdaq, they are all trading lower. The Dow now down by less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Mikhail Gorbachev, who died this week at age 91, defied convention throughout some of the most tumultuous years of the Cold War. When he assumed leadership of the Soviet Union in 1985, he inherited a country that was economically moribund, stubbornly corrupt, and suffering through the final spasms of ideological failure. A lesser leader might have tried to ignore such challenges. Gorbachev took many of them head-on. Perhaps his greatest achievement was overseeing the largely bloodless dissolution of his own empire. Millions of people across Central and Eastern Europe gained freedom as a result. Gorbachev's legacy is complex, to be sure. The final leader of the Soviet Union failed at most of his ambitions, but the world was better for them all the same. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10.5 minutes left in the trading day, and we are definitely well off our lows of the session. A little bit of green, in fact, when it comes to the Dow Jones Industrial Average. So let's get to it with our Drive to the Close guest.
Liz Young is back with us. She's head of investment strategy at SoFi. Liz joins us this afternoon from New York City. Liz, good to have you back with us. I don't want to say don't look now, but there's actually a little bit of green on the screen. The Dow higher by close to 0.1%, and the S&P off its lows, but still only down 0.1%. Dare I say that traders are just standing back and kind of breathing a sigh of relief, waiting for tomorrow's jobs numbers?
You could dare say that. I think that we're going to continue.
But maybe I'm wrong if I say that. I don't know.
I believe that's a no from Liz Young.
Yeah. Well, here's the thing. I think the market is going to continue to see these little attempts at rallies, and maybe not a huge surprise after 4 straight down days. You usually get a little relief after that. It starts to feel like it's exhausted. And you also have heard a number of different measures over the last couple days, or maybe even the last 24 hours, saying that the market was oversold. So if anybody was looking for a reason to try to buy the dip, maybe not surprising that it happened today. However, going into the end of August, and now we've started September, next week, everybody sort of comes back into the fold, and that's when I would expect volatility to pick back up again. We're certainly not out of the woods. I don't think that we're going to get out of a trading range for a while, and until we at least hear that inflation has cooled much more than it is today.
So What's your thoughts in terms of the smart strategy right now, Liz? And I'm curious about what you guys are seeing on your platform in terms of trading flows, trading positions.
Yeah, well, I think everybody over the summer sees lower volumes, obviously, especially when you look at the retail trader, though, which is obviously a lot more of what we have on our platform. We have individual investors. That meme stock craze, I think, showed that they are still here, they're still active, they're still investing. So that was comforting to me. We actually did a survey recently of our investors and found out that 74% of them are planning to invest just as much, if not more, in the next 6 months, despite market volatility that's happened this year. So I think that individual investors are still here. To your first question about what's the smart strategy, given that where we are right now, the chance of recession is still 50% in 2023, that's the consensus view that we're 50-50, you have to have both the recession playbook out and that playbook out to have long-term positions that are going to generate growth for you. So some of the sectors that I like here are healthcare. That's really important to have, especially in the large cap space. Those are typically seen as defensive, and healthcare did really well today. And when you look at things even in the smaller cap space, healthcare can provide a lot of growth opportunity. But I think you also still want to have an allocation to some of those classic defensive plays like staples. And you can also have an allocation to consumer discretionary, because that's a sector that can generate growth coming out of a painful period like this if the consumer holds up, which is what a lot of what the bull case is residing around.
Hey, Liz, I want to go back to what you're seeing on the platform. You mentioned that the retail traders that are using your platform are still planning to put as much money as they put into, stocks last year, this year. What are they going to, though? Are they buying indexes, or are they actually buying single stocks?
There's a lot of single stock activity. And, honestly,
Really?
in this environment, I don't think that that's a bad idea. When you look at just broad indexes that are trading on macro headlines almost every single day, sometimes you do have to dig down deeper into sectors and choose the winners that you think are going to be the most durable in an environment like this. So you want to be choosing cash flow, companies that are generating cash flow, companies that have an outlook that isn't completely hit or isn't completely vulnerable to this environment, and companies that aren't trading at an outrageous PE multiple, given where we are with rates and given where we are with the Fed. So, there's still a lot of single stock activity, and I think that's been the trend for most individual investors over the last 2 to 3 years even. But I would also say that, I think many investors, especially if they're just starting out, you do want to have a core of the portfolio where you're not taking too much single stock risk. So it's okay to use those single stocks with a portion of your money, but the core of the portfolio should be that long-term sort of don't think about it too much and make sure that it's in a diversified index type fund.
But a fair amount of, I feel like, index funds can be disproportionately leaning in a certain way. Yes?
Yep.
No? Right?
That's a good point, because the tech stocks are so big,
tech.
for example.
So what kind of index fund do you mean then?
Well, so if you look at an index fund like the S&P, you're correct that, the top 5 names are still going to account for a large portion of the index. You could use something like an equal-weighted S&P index. You also want to make sure that you have an allocation. If you look at maybe even the Dow, or if you look at the Russell 1000, that's also a large cap index, gives you a little bit more diversity. And you think about a lot of different ways to allocate to ETFs today. There are so many options out there. There are plenty that do not allocate so much to those top market cap weights. So again, the equal weighted is probably the most simple way to spread out the love, so to speak, from those big names into some smaller ones.
All right, just quickly, I've got to ask you, Liz. So here we are at the U.S. Open. It is packed, crowded. We're early in on this tournament. God, I don't feel like I see any signs of recession around here. Mind you, I know that this plays in many ways to a certain part of our income strata, if you will.
The higher part.
Yeah, and no doubt about it. But man, it's hard for me to think recession when I look around me. How do you feel about that? And just got about 30 seconds.
Yeah, I don't think we're in one right now. And if we're going to have one, it's going to come in 2023, and I think we'll see some material cooling into the end of this year. But again, labor market is strong and plenty of spending still going on, people engaging in those summer activities.
Hence the way you talk about a portfolio of kind of making sure you have exposure to a couple different scenarios here. Liz, great to check in with you. Liz Young, she's head of investment strategy at SoFi Technologies, the online personal financial services company, joining us once again on the phone in New York City. And Tim, we've just got about 2.5 minutes left in today's trading session. We are seeing some buying into the close. What does that mean? You've got the S&P and Dow now in the green, up 6 on the S&P, the Dow up 98 points, and the NASDAQ still down about 44, but we're going to finish at our best levels of this session. You are listening and watching Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Turned out to be a mixed day on Wall Street. First trading session of September, an up day for the S&P 500 index, an up day for the Dow Jones Industrial Average. NASDAQ, however, did remain lower, falling 38 points at the close, down by just about 0.3%. S&P higher by 9, up by 0.2% right now. We've got the Dow up 124 as we await the closing bell, up by 0.4%. 10-year yield 3.25%. The 2-year yield, spot gold down $16 the ounce, down 0.9%. $16.95 the ounce on the precious metal. West Texas Intermediate crude down 3.6% today. 86.32 right now for a barrel of WTI crude, down 3.23. So we had stocks finishing mixed today. As for the overall market backdrop, Liz Young is head of investment strategy at SoFi. She was our guest moments ago right here on Bloomberg Business Week.
Going into the end of August, and now we've started September, next week everybody sort of comes back into the fold, and that's when I would expect volatility to pick back up again. We're certainly not out of the woods. I don't think that we're going to get out of a trading range for a while, and until we at least hear that inflation has cooled much more than it is today.
And so ahead of the closing bell, investors are checking out recent data that showed the U.S. economy remained robust last month, even as the Federal Reserve stepped up its inflation battle. And there you have it, sound of the closing bell at the New York Stock Exchange. Closing numbers are in now with the S&P up 13 points today, higher by 0.3%. Dow Jones Industrial Average rallying 146, up 0.5%. A lot of these gains coming in the final few minutes of trading. NASDAQ, though, ended the day lower. The NASDAQ Composite Index down 31, down 0.3. NASDAQ 100 Index today also advanced, little changed, up less than 0.1%. Bitcoin down 1.6%, 19,878 on Bitcoin. NVIDIA down the most in more than 2 years after warning that new rules governing the export of artificial intelligence chips to China may affect hundreds of millions of dollars in revenue. Today, NVIDIA shares tumbled 7.8%. We are awaiting the latest numbers out of Broadcom and Lululemon. So again, recapping here, the Dow, the S&P, both higher, NASDAQ lower, S&P up 12, a gain of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some moves.
On Bloomberg Radio.
All right, everybody, time for your movers and shakers and a little bit more as we dig into the market close. We're also keeping an eye out for Lululemon and Broadcom. They are expected to report their earnings, so as soon as they cross, we'll get to them. But right now, we want to talk a little bit more about the day's trade. And with us is Bloomberg News markets reporter Abigail Doolittle. She's back in our Bloomberg Interactive Broker studio. So, Abigail, what stood out for you in the trade today?
Well, I think these last couple of minutes of trading, it's really pretty interesting because, of course, coming into today, we were down for 4 days pretty significantly on the S&P 500, down about 5%, really taking August into the red. And now here in the last couple of minutes, we have some of these indexes popping higher, as Charlie Pellet was just talking about. The S&P 500 up 0.3%, the Dow up 0.5%. Now, most of the indexes, though, to be fair, are still lower. The NASDAQ composite down a little bit. The 100, the NASDAQ 100 big tech up ever so slightly. That stocks, though, that's probably the biggest story on the day, down 2% off of its lows. Nonetheless, a pretty big decline there. And that, of course, has to do everything with NVIDIA and what Charlie was talking about with the possibility of some of their revenue being at risk on new rules around those AI chips. Plus, you have another lockdown in China. They received more than a quarter of their revenue from China. So if demand wanes there, that could weigh too. One point I'd like to make, a lot of these declines we've been seeing recently on below average volume, this today, now these mixed moves, at least for the S&P 500, it's on above average, 15% above the 20-day moving average. So these buyers that stepped up at the end of the day, they mean it.
Isn't that interesting? I find it kind of odd, Abigail, ahead of tomorrow's jobs report. And it does make me, especially when you talk about the volume and to see the buying into the close and then on heavier volume, I just find it odd.
Yeah, you know, it's interesting. Well, I've been told, and I haven't confirmed this, but that when you see big action in the last 10 minutes, that a lot of times it's corporate buying. If that's the case, it suggests that there's some confidence on the part of corporations. But, you know, something to keep in mind, the S&P 500, it's not a huge gain. It's up 0.3%. What stands out more is the bullish reversal. So I guess the bigger question is, because the S&P 500 over the last 5 days is still down probably about 5.5%, 6% or so. So the bigger question is, does this bullish reversal on the close, does it portend some sort of trend shift in the near term? And if so, what does that mean about jobs? I was just interviewing Alon Rosen on Options Insight of, what's that?
No, that's what I thought was interesting ahead of a monthly jobs report.
Yeah.
That, you know, each monthly jobs report. But anyway, go ahead. Tell us about what your interview, what came out of it.
Well, he's the head of options over at Oppenheimer, and he was saying that there's this whisper jobs number out there of about 550,000 jobs added, which is similar to the month of July. So if that's the case, that, of course, puts lots of pressure on the idea that the Fed will have to be hiking. Who knows? Maybe that whisper number shrank a little bit in the last hour of trading. But yes, I think it is a great point on your part that it's interesting to see this reversal into ahead of that key economic data.
A strong jobs report that would also say to me that, you know, maybe more of a soft landing. Maybe the Fed can do it. Like if they still have wiggle room within the labor market.
You didn't get the memo,
maybe so.
We're not supposed to say soft landing anymore.
No, we're not.
Growth recession is
growth
now.
recession. That's the new way of putting it.
Yeah, this is you were on vacation, Carol. No more soft landing.
3 days.
3 days you were on vacation.
It wasn't a vacation. I was on the road, spending a lot on gas and other things.
But not as much as you were spending on gas because gas has been down, you know, every day for 75 days roughly.
That's true.
At this point, hey Abigail, what about breadth today? I found this really interesting. It seems like on the S&P 500 we're split 289 stocks higher, 211 lower. I pointed that out to Carol just before the close, saying, this kind of shows us that there's a little bit of strength here as we get to the close.
Yeah, that's a good point. I'm taking a look at that myself right now, and there is just a little bit more strength there toward to the upside, which is not surprising given the gain. And from a sector standpoint, that's true too. You have more sectors higher than not. 8 of 11 sectors are higher, led by healthcare and utilities. So that piece of it's not great because those are, of course, defensive sectors. But right behind it, you have consumer services and discretionary also up about 1%. To the downside, of course, it's energy and then technology because of that chip drag. I think that some of the bounce back that we saw at the end of the day, probably some dip buyers stepping in and saying, you know what, this decline that we've had, not just since the middle of August, but over the last 5 days since Fed Chair Jay Powell gave that hawkish message last week. You know what, it's too much, it's overdone, let's step up and buy, and ahead of the jobs report. And it probably does suggest that they think that it's going to be maybe some sort of a Goldilocks number, because I heard you guys just talking about it doesn't look like a recession out there. If we do get another report that's well above the estimate, with of 1 million jobs, say, were added over the last 2 months, which that whisper number would suggest, that is strong. That would be I'm going to say what I'm not supposed to say, the soft landing, or the new lingo, the growth recession.
Abigail, if you say soft landing, I'll say soft landing. I'm in it with you.
Team effort.
What's interesting is yeah, absolutely. Liz Young, who's head of investment strategy at SoFi Technologies, so they, can obviously tell us what's going on their trading platforms. But her view at this point is she goes, you have to have both a recession playbook and a long-term playbook. In other words, kind of hedge your bets that there could be, she's thinking, looking at a recession maybe 2023 or at least 50% of a chance there. So you have to think about that. But at the same time, there's a lot of good economic data points, as we saw with was it ISM today, like that continue to come at us that show us that there's still resilience in the economy.
Yeah, that's a great point, and that ISM number is certainly relatively strong, above expectations, above that all-important 50. It's also interesting because, of course, the U.S. PMIs are below 50, so those smaller to mid-sized businesses are showing more of a contraction. The larger businesses are still in expansion, and maybe that's the point in terms of structuring portfolios right now, really going toward the high quality, those big cap companies that have a lot of cash and a lot of revenue, the more need to haves. In addition, some asset diversification. In this kind of environment, I think that the more that investors are diversified, and of course on Options Insight, I'm always hearing about hedging, and of course Alon Rosen today at Oppenheimer, he was talking about that. He thinks that it makes all the sense in the world, even with this little bit of green at the end of the day, that you want to keep portfolios hedged for that what-if scenario. The VIX, it's at a 25 handle. It's down a little bit today, but it's certainly elevated. There's just so much uncertainty, and right after the jobs report, not right after time-wise, but in the month of September, we have CPI, PPI, and then, of course, the all-important September meeting, which it seems like everybody's thinking is going to be 75 basis points at this point, but so much could change between now and then. So uncertainty, it's got to be a tough time for portfolio managers and investors right now.
Isn't it September that's usually the worst month for stocks? Not really October.
It is. Yes. Well, it's so funny you're saying that, because if you had asked me just a couple days ago, I would have said October, but you're absolutely right. It's September. Mm-hmm. That is the down month. And actually, Dan Curtis, our team leader for the markets team, he came up with this great stat, which if going into September, so at the end of August, if the S&P 500 is higher, September actually tends to trade higher by less than 1%. However, if you go into September or you finish out August with a decline, the S&P 500 tends to close down in September by 2.5%. So that historic, it doesn't mean it has to happen, but it suggests that, September could certainly be a bumpy ride, to say the least.
Love Dan Curtis and his team. Love you and your analysis of the market. So, Abigail, thank you so much. Our Abigail Doolittle, Bloomberg News markets reporter.
Let's get to world and national news. Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. Former President Trump's request for a special master to review documents seized from his Florida estate will have to wait. The judge in the case will not make a ruling today after the afternoon hearing. U.S. District Judge Aileen Cannon said she would enter a written order with no hint at a timeline. Former President Trump has settled a long-running legal fight with House Democrats over a subpoena for years of his financial records. We get details now from Bloomberg's Amy Morris.
This deal is with the House Oversight Committee, which was looking into, in their words, conflicts of interest, self-dealing, and foreign financial ties. The case dates back to 2019 when the committee subpoenaed Trump's accounting firm for 8 years of his financial records after his former attorney, Michael Cohen, testified before Congress accusing Trump of fraud. This is not related to a separate court fight between Trump and the House Ways and Means Committee, which is trying to get its hands on Trump's tax returns. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden wants voters headed into midterm elections to think more about Donald Trump and less about the economy. The president has been portraying the Republican Party as still being under the spell of his predecessor and Trump's false claims about the 2020 election. Last week, Biden referred to his opponents as semi-fascist. Tonight, President Biden will amplify that message in a primetime speech in Philadelphia. FEMA Administrator Deanne Criswell will travel to Jackson, Mississippi tomorrow to assess the ongoing water crisis there. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our D.C. newsroom. Let's start with, we've got some news after the close. Lululemon, out with their earnings, but Starbucks also talking about a new executive appointment, and Starbucks up That's 0.7% in the after hours, Tim.
Yeah, the company is saying that they're getting a new CEO. Narishman is coming in as the company CEO after Howard Schultz has come back to the company. The founder, or I don't want to say founder, but the guy who created Starbucks into what we know today has come back for a third time, this time as interim CEO. The company does say that Howard Schultz is going to continue as interim CEO until April 1st, so quite a bit of time that he has left the company, as right now it really struggles not just to come back after the COVID crisis, but with labor issues around the country as more and more Starbucks are looking to unionize.
Yeah, stock is down 27% so far this year, right? So, we talk about companies going through different iterations and evolutions, and it certainly seems like another one for Starbucks, and we are seeing it higher in the after hours.
Yeah, the company's new CEO will be Laxman Narasimhan, was the CEO of Reckitt Benckiser. We saw the Reckitt stock move lower overnight after it was announced that that CEO would move away. We just didn't know where they would go.
Interesting. All right, and here's a blockbuster move because we've got shares of Lululemon. They're up almost 8% in the after hours. This is after the company reported their earnings. What's really important here is the fiscal year net revenue outlook, $7.87 billion to $7.94 billion. That is a bump up from the company's previous estimate when it had seen $7.61 billion to $7.71 billion. So fiscal year net revenue, they're bumping it up, and no doubt about it. This is all about outlook, Tim. We talk about the importance of this. I will say they also, their second quarter adjusted EPS, $2.20, big beat. The estimate on the street was $1.87. Second quarter stores comp sales ex FX was up 18%. That beat the estimate of 13.6%. Second quarter total comp sales ex FX, X currency, up 25%. The estimate was 15.8%. Man, they are just blowing away the numbers.
Yeah, shares up 8% in the after hours as we speak.
All right, we'll keep an eye on it, certainly in the Friday trade.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lululemon shares higher after hours, up by about 7% after boosting its year net revenue forecast. Also higher after hours. Broadcom, AVGO on the ticker there. Third quarter net revenue, $8.46 billion. Estimates were for $8.41 billion after hours. Broadcom shares higher now by just about 1.6%. Surprising late day reversal. You heard us talking about it all day long. For much of the session, we told you stocks are on the minus side, but at the close, we saw a rally in the final few minutes of trading, and today the S&P closed higher by 11 points, up 0.3%. Dow Industrials up 146 points, up by about 0.5%. NASDAQ, though, ended the session lower. The NASDAQ Composite Index today down 31 points, a drop there of 0.3%. Investors, of course, awaiting tomorrow morning's jobs report to gauge just how hawkish the Federal Reserve will be. We will have complete coverage as the number drops, 8:30 a.m. Wall Street time, and of course our experienced analysis as we take apart the numbers after we get the jobs report. 10-year yield 3.25%. We've got the 2-year yielding 3.50%. Spot gold down $15 the ounce, down 0.9%, $16.95. West Texas Intermediate crude down 3.6%, $86.32 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, the U.S. Open, a 2-week spectacle that began August 29th, typically draws hundreds of thousands of spectators to Flushing, Queens. Part of this scene, too, is the matchups between the USTA and global corporations. And last month, IBM and the USTA announcing a multi-year partnership ahead of this year's Open. This is an ongoing relationship, and we want to get into that.
Yeah, 30-year partnership.
Yep,
Noah Sykin is Vice President of Sports and Entertainment Partnerships at IBM. He's with us right now on site here at the U.S. Open. No, I want to put you on the spot here because this is a big deal for your company. I think some people would look at your job and say, okay, VP of Sports and Entertainment Partnerships, that's pretty cool. You're going to spend the next 2 weeks watching a lot of tennis. But you were just telling us you don't get to see any tennis when you're out here because you're too busy getting work done.
Exactly. Thanks for having me. And there's a ton of tennis out here. I couldn't keep up with it if I wanted to. But you know how everybody can? Check out the official digital platforms. And that's what I spend my time focused on. Me and my team building the digital platforms, website, mobile applications, integrating data, and hopefully telling stories to bring the action to fans wherever they are.
That's such a big part of it, right? And, I mean, really expands the audience. Tell us about kind of what kind of experience people can see when it comes to the U.S. Open online.
Sure. So we bring all the scores live to people around the world, but we also think about how do we get them more deeply engaged in the matches. We use artificial intelligence. We use artificial intelligence to mine the data, not just kind of all the numbers, but what everybody's saying and writing about the players leading into the tournament and during the tournament, bringing it all together, and then providing predictions for each match. And, you know, sometimes we get it right, sometimes we get it wrong, but it sparks conversation, right? And that's what a business wants. They want their customers or fans talking about.
All right, so what are they talking about when it comes to Serena?
Well, everybody's excited, obviously, right?
It's so much, like, the momentum and volume around Serena. How much are you guys seeing?
Exactly. We've seen an explosion of data around Serena. You know, she really wasn't playing well coming into the U.S. Open, and our first predictions for her matches were a little bit off. But what nobody can really account for is Serena on center court at Wimbledon, what it does to the competition. So,
did you say Wimbledon?
I'm sorry, at the U.S. Open. I have tennis on my mind.
The USTA police are coming your way.
I still have Wimbledon on my mind.
No.
But you know, she is she's a legend. But the aura she brings to the court is just amazing, and we can see it in the data.
Well, let's talk a little bit about the data and specifically how IBM sees a return on the investment that you make with the USTA, that you make with the U.S. Open. This is a partnership that's gone on for 3 decades. Draw the line for me and for our audience right now from the support that you provide to the USTA, the money that you provide, that you pay, to getting to the top line and bottom line at IBM. How do you make that connection here?
Sure. Well, the USTA is a business. They have fans. They may call them fans instead of customers. They want to sell tickets. They want to sell merchandise. They want to sell food and beverage. And so that's our goal, is to help them achieve their business objectives, just like a bank or an insurance company at anywhere in the world. And the same technologies that we just talked about, artificial intelligence that's driving match predictions or consuming all of that natural language understanding, those are the same technologies in traditional businesses around the world. If you're a bank, if you're a retailer, you want to know what your customers are saying. You want to be able to take in that data, make sense of it, and drive a better business result, the same way that we're taking in data about Serena Williams. So for us, this is about demonstrating the same core technologies that we have running in businesses. They just run at a tennis tournament here, but they drive the same kinds of business results.
But are people who are seeing IBM's technologies on display on the app, or perhaps when they're watching this on TV, are those the decision makers that you need to reach in order to increase your business at IBM?
Yeah, so there's all kinds of decision makers. There's people that are going to buy our products. There's also people that are going to invest in our stock. There's also folks that may want to work at IBM someday. So these are all people that we want to influence. But for me, the most exciting part is when we're standing with a great partner and we share what we're doing from a prediction standpoint or some part of the technology, and they say, oh, I can now bring that to my business in this way. And that's kind of the connection that we try to make.
Well, and you're VP of Sports and Entertainment Partnerships at IBM. Not all sports and entertainment partnerships are alike, or not all sports will give you essentially the payoff that maybe the U.S. Open. Is that fair to say?
Yeah, well, look around us here. We have 900,000 people who are going to come to this event, and millions of people on broadcast and radio and the like. And so the ability to project the brand, to project these capabilities to that size audience is pretty special.
Okay, predictions for the end of the tournament.
Are you guys doing that yet?
If I told you, I'd have to kill you, or I might go fly to Vegas. No, look, everybody can go to usopen.org and check out the predictions for tonight's matches, tomorrow night's matches. We have an early insight on our prediction for Serena tomorrow night.
Can you share it with us?
But I'm not going to share it with you. No, we have her slightly favored. We have her slightly favored going into tomorrow night's match. And I hope she delivers. And I know the USTA hopes she delivers.
What about the doubles tonight with Venus and Serena?
Yeah, I actually haven't looked at that prediction yet. I have to admit. So
no, that's fair.
Maybe you can go to usopen.org.
Shameless promotion, but we're allowed to do that. What's one thing that might surprise people about what you do? Just got about 20 seconds left.
That I don't watch much tennis.
I think it's shocking.
I know, that's so surprising.
But you said you are going to watch the doubles tonight?
Of course. I take a moment and focus on a couple of those spectacular matches just to make sure I don't miss the action.
Well, someone's got to get work done here.
But if it was a baseball game, or what's your like sports? Okay, I can't do that.
I don't know. I'm a big golfer, so we'll see you at the Masters. Come down to Augusta.
A different U.S. Open.
Sounds good. Noah Sykin, VP of Sports and Entertainment Partnerships at IBM. Thank you so much here at the U.S. Open.
Thank you.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I want to be quick because I want to get right to our guest. But first, we're going to check in with the Chief Commercial Officer of USDA. She's sitting next to me. Lots to talk about. But first up, let's get back to Charlie Pellet with a look at the closing markets.
Indeed, we had a couple of high-profile earnings after the closing bell. Lululemon and Broadcom shares of both companies are higher. Lululemon raising its full-year outlook. Shares up now by 8.4%. Broadcom, a chip maker that supplies some of the largest companies in the tech industry, up after hours by 2.6%. Turned out to be an up day for the S&P and the Dow Jones Industrial Average. A surprising late-day reversal took stocks higher as investors await tomorrow morning's jobs report. Liz Young is head of investment strategy at SoFi, and right here on Bloomberg Business Week, she told us her clients are sticking with the program.
When you look at the retail trader, though, which is obviously a lot more of what we have on our platform, we have individual investors. That meme stock craze, I think, showed that they are still here, they're still active, they're still investing. So that was comforting to me. We actually did a survey recently of our investors and found out that 74% of them are planning to invest just as much, if not more, in the next 6 months, despite market volatility that's happened this year.
S&P today up by 11 points, up by 0.3%. The Dow up 146, up 0.5. NASDAQ down 31, a drop there of 0.3%. 10-year yield 3.25%. 2-year yield 3.51%. Spot gold down 0.9%, $16.95 the ounce. West Texas Intermediate crude down 3.5%, $86.45 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Our next guest, we can only imagine how busy she's been because I'm sure it's been nonstop. Want to bring her in?
Yeah, I'll
Do you
bring
want me
her
to bring her in?
Kirsten Corio is USDA Chief Commercial Officer. She's on site here at the U.S. Open with us. It's good to have you with us. How are you?
It's great to be here with you guys.
How are you doing, though? I mean, this is what you work toward all year.
It is. I mean, we work 49 weeks of the year to produce these 3 weeks, and it's awesome. It's super gratifying to see it come together, but the most gratifying thing is just to see these thrilled fans. These fans are so thrilled. They're having the best time. They're having lots of honeydeuces.
I have not yet, but I said as soon as it's 5 o'clock, it's honeydeuce time. Kirsten, I am floored at the crowd here. Having done this pre-pandemic for several years, this is not the crowd I would normally see when we were doing this. I'm not saying it was always a big crowd, but it's early in, right?
Yeah,
on the
week.
Series. I am amazed. It is packed.
It is jammed. I mean, I think you may have seen, we set records for opening night attendance. We set another record, I think it was last night's attendance. And we'll do that several times more through. It's just we don't have enough room at the end for everybody that wants to come. It's awesome.
I know, it's remarkable. Tickets for Friday night, like the worst tickets that you can get, $400.
When I looked this morning, it was over $570. And I don't set that price, to be clear.
That's what I wanted to know.
Those are people reselling their tickets.
So it's sold out. So this is all resellers at this point?
This is all resale.
How long has it been sold out?
Well, Friday night in particular every session has been well sold for a while, even well before Serena announced that this may be her last tournament, her last go. So, but for Friday night in particular, in every session that she wins, and people then speculate that she'll then play in the next one, even before the schedule comes out, we see what we call, that's the get-in price. We see that double. She wins the match last night, Friday night doubles, even though people don't know that she's playing Friday night. They don't yet know if she's going to play Friday day or night. They're just speculating. And once that schedule comes out, it skyrockets even more. It's nuts. And if you looked at the courtside seats, if you tried to buy a courtside seat, a resale seat, they're close to $10,000 a piece.
When are those? What is the actual price though before they're resold for a seat like that?
Well, we dynamically and variably price our tickets, so every session is priced differently in the same price code. And then given demand factors, we may change prices multiple times in a given day.
Based on who's playing, demand, what?
Based on demand factors and what we're seeing. What sessions are really resonating with people, which ones are they really willing to come out and pay more for, and which ones might be softer and might need to be even a little bit lesser priced.
Is that the USTA doing that, or is that
So we do that for our primary tickets. The USTA does that for our own primary tickets. But at this point, what we're seeing in terms of get-in price for both the cheapest ticket and then the best ticket or the best seat in the house, that's not our price. That is resellers' prices.
What happens with celebrities? And we know, like, a lot of people were at, I guess, in Serena's box is what we had heard and stuff. But how does it work for celebrities? Because we were we did a whole story at Bloomberg just about the celebrities who were there cheering her on. But it's kind of one of the fun things of, I feel like, watching matches, too, is also just checking out who's in the crowd.
It's crazy.
How does that work? Can I ask?
There's a whole
baseball
system.
Or inside
Well,
tennis?
baseball is a good way to put it because we're right next door to Citi Field. And there are some Mets players that have really enjoyed coming out to watch. And by the way, that's reciprocal. We've had players here that have loved going to see the Mets games earlier this week too. But for the celebrity, it's a whole process. We get them from many different angles. Obviously, Serena has her own, her own list of celebrities that come out for her. You mentioned Tiger Woods was in her box last night. And so she comes with her own list, and we do our best to satisfy the ticket demand from her camp and from the other players' camp, for every player's camp every time they play. But her list happens to include many more celebrities than most do. And for those that don't have
been playing a long time,
really well. For those that don't have their own personal relationship with Serena or her family, we get those through our PR team works. It seems like around the clock to try to satisfy the demand that comes in. And we place them as best we can, and sometimes, unfortunately, we have to say no. Unfortunately, we have to say sometimes there's no more room at the inn to put you.
That's what I wanted to ask. For those of us who are just, normal people who we're told no, you're telling me that celebrities also get no's as well.
It can happen. We do our best to ensure it doesn't happen, but sometimes we just physically run out of space.
Who does it? Do you want to make? Who has to tell the celebrities?
Oh, thankfully that is not in my job description. Not yet.
Hey, what happens next year if Serena's not playing? If this is indeed her last major?
I think we worried about this for a long time. The changing of the guard. What happens to the generation after the big four of the men are gone? Serena and Venus are no longer playing. And we got a little glimpse of that last year, where we didn't have many marquee players that are really household names. And we ended up with this fairy tale story with this qualifier in Emma Raducanu from the UK. She qualified for the tournament and became the 2021 women's singles champion. And she was a sensation in New York, and as was her opponent, the runner-up, Leylah Fernandez. So, I think people begin to know and love the next generation anyway, as they would with any other sport. And these young personalities captivate people in the way that the Big Four did, but they just have to get to know them.
We're going to continue with Kirsten in just a moment. Just want to mention a headline crossing, the arrest of Glenpoint Capital co-founder Neil Phillips for alleged foreign exchange market manipulation, threatening to ripple really across the hedge fund industry as another firm suspended staffers who previously worked with him. So sounds like this is a bit of a story we'll look for more, certainly, in our world and national news.
A lot of
and
news happening
news.
after hours, too.
Yeah.
Shell is also going to sell its stake in Era Energy to ICAP for about $2 billion in cash.
So we're watching tennis. We're not going to ask Kirsten about that, but we are going to come back with her in just a moment. Kirsten Corriero, she's Chief Commercial Officer at USTA. She's been very busy, but really filling us in on some of the specific details of what it takes to get this up and running.
Let's get to world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Sam. No ruling yet from a federal judge who heard arguments this afternoon on whether to appoint an outside legal expert to review government records that were seized in a search of former President Trump's Florida home. U.S. District Judge Aileen Cannon says she will issue a written ruling at some point, but gave no timeline. In a move that could affect supply chains globally, China has shut down the city of Chengdu because of a COVID-19 outbreak. Bloomberg's Enda Curran says it is a city that plays a large role in commerce.
It's a reasonably important industrial hub. It's known for auto production, electronics production, makes up about 2% of GDP. Also popular with tourists, by the way. It is a very popular panda sanctuary over there. And it speaks to the idea that China is just so determined it's not letting go yet of this COVID-0 strategy.
Bloomberg's Enda Curran. Chengdu has seen 900 COVID cases in 10 days. Some Chinese cities have locked down after just one infection. A danger of another kind has brought UN inspectors to the Zaporizhzhia nuclear power plant in Ukraine. Rafael Grossi, the head of the International Atomic Energy Agency, says they are concerned about the stability of the plant as fighting rages around it. He'd like inspectors to stay a while.
I am going to consider the possibility of establishing a continued presence of the IAEA at the plant, which we believe it's indispensable to stabilize the situation and to get regular reliable, impartial, neutral updates.
Grassi says they will conduct nuclear safety activities. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. We want to continue with Kirsten Corio. She's Chief Commercial Officer at USTA, on site at the U.S. Open. We've got about a minute and a half. We'll do some more news, and then we'll come back. When did you start planning for this one? Is it really literally like when this is over, you start for the next year?
We're already planning for 2023, and we have been for a while. Certain things you just can't accomplish in the time span that we want, so we need longer runway. But I think our 2023 list is already quite long. But as we get in the tournament and we realize certain things that we want to change, add it to the 2023 list. Add it to the 2023 list. So it's more than a year. It's really more than a year that we're planning for the subsequent year's U.S. Open.
I mean, take us into how the sausage is made. Like, what have you added to the list for 2023 already this year?
In some cases, it's more staff.
Yeah.
More staff to satisfy the demand and to really client servicing across the board, whether those clients are ticket holders or hospitality clients or broadcast partners, rights holders that are on site. In some cases, it's really just, how do we satisfy the extraordinary premium demand with more premium products that enable people to come out and have like a bucket list kind of experience with their clients or employees. So it runs the gamut, depending on the department we're in.
You said more staff. Labor, has that been tough for you guys, just like everybody else, in terms of finding all the people that you want and need?
I don't think it's really that. I think it's more, we mentioned at the start how many people are here and how many people want to be here. And that's true across the board. It's not just our fans, but it's also our rights holders, our global rights holders from across the world. We've got more here than we've had in many, many years. And, we just want to ensure that we have more people, more bandwidth to help service the various stakeholders and clients. Players, we've got players that have come up with their friends and family and entourages in ways that they haven't in years because people couldn't travel. International travel was restricted. And how do we better service them and take care of their friends and families in ways that enable everyone to get access?
Does it feel like the pandemic's over?
Oh, it sure does.
As we are surrounded by people. We're going to continue with Kirsten Corio. She's Chief Commercial Officer at USTA. She is with us on site at the U.S. Open. Carol Massler, Tim Stanovic. We're Bloomberg Business Week on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. After hours, we've got Lululemon now up by 9.7%. Lululemon Athletica raising its full-year outlook, the latest sign that consumer demand among higher-income shoppers remains robust. Broadcom, a chip maker that supplies some of the largest companies in the tech industry, out with a strong sales forecast for the current quarter. After hours, Broadcom up now by 1.9%. Surprising late-day reversal on Wall Street today. The Dow, the S&P both higher. NASDAQ did remain lower, but a late-day rally there. Final few minutes of trading sent the S&P up by 11 points, up 0.3%. At the worst level, though, we did have the S&P down by 1.2%. The Dow up today by 146 points, up just about 0.5%. NASDAQ down 31, a decline there of 0.3%. 10-year yield, 3.25%. 2-year yield, 3.51%. Again, the 10-year 3.25. Spot gold $16.96 the ounce, down 0.9%. West Texas Intermediate crude down 3.5%, $86.38 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We do want to get back to our guests, Carol Master, Tim Stanovic, live at the U.S. Open. And Kirsten Corio, Chief Commercial Officer at USTA, is still with us on site at the Open. You do a lot of stuff here, and we've talked about in terms of ticketing, hospitality, but you've taken on a new role of Chief Commercial Officer. So what does that mean? Right. And what does it mean to kind of market the USTA, which I feel like has such a well-known brand? Tell us, top of mind for you.
So it also includes our corporate partners, who are our true partners in ensuring that we have an opportunity to deliver this event in such a spectacular way for the fans. We can see it from where we sit here right now, but there's spectacular activations across the grounds that our partners bring for the fans, as well as events like, our partners are activating in different ways, whether it's the American Express fan experience. That's a beautiful, awesome experience that I highly recommend that you should go through. Our partners at Chase have done the Chase Soundcheck that they brought DNCE, Joe Jonas's band, that performed last Friday night to cap off the end of Fan Week, and that was free and open to the public. And so they really enhance the event and enable us to bring it to just such a higher level.
Do you have a million corporate sponsors who are like, we want to be part of this?
We have many that are interested. We are selective in who we partner with, and you can look around and see who our partners are that really align really nicely with us. We have such an attractive audience, both those that are physically on site and those that are global around the world to any corporate sponsor, really. We're very gender neutral. Mm-hmm. We're very diverse. If you look around our crowd and you watch the tennis, it's a very diverse crowd. It's just a very attractive audience for partners to reach. And our broadcast rights holders, we're global. We're broadcasting over 200 countries and territories around the world. And while we're here in the U.S. and we're celebrating a U.S. icon in Serena Williams, our players come from all over the world, and our fans are from all over the world, and our global rights holder partners enable us to do that in the various territories and regions. So all that becomes part of the purview and part of the privilege to work on those relationships and ensure that we deliver as best we can for them and for the fans around the world.
I have to change the subject a little bit, because as you were talking, I look over your shoulder, Kirsten, and I see some of the best tennis players in the world walking in and out of the media center, but also just walking amongst fans here, being escorted to their games, their matches, what they're going to play, to their courts. And I think to myself, what other sporting event do you have access to literally come here to watch and encounter the best people in that sport in the entire world?
It's pretty extraordinary. And you're seeing that now in the middle of the first week of the main draw. Last week during the Fan Week, we were open and free to the public, where there's the qualifying tournament, but there's also all the top pros are practicing freely across the courts, including in Arthur Ashe Stadium. So we have something called the Fan Pass. It's free to register for. And the Ashe Experience, where people could show that Fan Pass and come in and sit in the first row courtside in Arthur Ashe Stadium, where they may never, ever have a chance to sit there in their lifetime and see those players up close and personal. And people are actually applauding for points that they're playing in practice. And the players stay and they sign autographs, they sign the balls, they sign the hats. They're really free and loose during that fan week, and it's just an extraordinary opportunity. And you're right, the ability to get close to global superstars in a sport is not something that fans are offered every day, regardless of the sport.
By the way, they're carrying their own tennis rackets.
They do.
Yes, they're carrying their big bags.
Even Serena
of tennis
Williams
rackets.
carries her own tennis racket bag.
Which is wonderful to see. Well, and then speaking of fans, like as you look at the crowd, first of all, I love that the U.S. Open is an international crowd. I love that I see kids all over the space of all ages and stuff. So how do you think about that from a marketing perspective as well?
Our mission is to grow and develop the game of tennis in the United States, and we want tennis to look like America. And it's so gratifying to see the fandom here really look like a microcosm, a cross-section of America. And, the kids, tremendous amount of kids during Fan Week, also during the main draw, of every age. And there's something here for all of them. Aside from the tennis, it's just a spectacular experience. It's a festival on the ground. Sometimes we say it's a food and wine festival with tennis on the side.
Can we talk about the food and wine? Like, that is part of this experience. I mean, it's just so fun. Like, I know when we get done, like, we go up and we either have a drink or something, but it's just wonderful. It's like a lot of fun. It's great food, great drinks.
Great food, great drinks.
How do you think about that, too? And feeding and being here for the whole crowd that's here. I mean, it's a lot of people.
It's a ton of people. Well, Danny Zauser and his team do a fabulous job of feeding everyone here, and not just feeding them, but feeding them in a way that they are thrilled about it, and they talk about it to all their friends and family. But the Honeydeuce is iconic. I think we will sell over a couple 100,000 of them.
$22 a pop.
$22 a pop, but when's the last time you got a cocktail in New York City and paid $22 and had a beautiful commemorative cup to take away with you?
That's right.
Last time I was at the U.S. Open. That's when.
Well done, well said.
Which actually, that was years ago that I got that, so this has been happening for a long time. Okay, the next generation of American tennis players. Perhaps we see Serena Williams play in her last major this time around. We don't know for sure. Who are the youngest American tennis players that we need to have on our radar?
Oh, wow. I am definitely not the player development pro here. Oh, wow.
Or maybe talk a little bit about the development pipeline, because as we do get to a point where we've seen what the Williams sisters have done for this sport has been so much.
Well, this is where you and I were talking before we got going about Chris Everett, because there was a piece on CBS, and it was just what I love about the USTA, and I know we've had an ongoing conversation over the last few years, that you do think about kids who maybe don't have access to tennis, and whether it's Chris Everett or someone else who's getting out to communities and making sure that kids who might not have the option to get a racket in their hands, they're making sure that they do have that access. That's what's incredible about this organization.
It is, and that's the mission, right? That's that piece was amazing, and it's all for how do we get more kids to lead a healthier lifestyle and get access to not just tennis, but after-school programs in underserved communities that they can be safe, they can be learning, they can do homework, they can play tennis and learn the game. And the NJTL is the National Junior Tennis and Learning Program is all about that. And I am definitely not the expert on that topic. I would be happy to set you up with those that are.
I'm sure the pipeline must be pretty robust. And but look, at the same time, what the Williams sisters have done for the sport,
they've inspired
totally iconic, and
multiple
they've inspired
generations.
So many people. Yeah.
All right, so what do you hope that someone who comes to the U.S. Open this year walks away with?
I hope they walk away and say, where can I play tennis and when can I play and who wants to play with me? I hope they're inspired to play tennis, because I know when I was a kid, every time I came here, that's the first thing I wanted to do. And I remember even one night going home and finding a court that had lights the same night and playing. And I hope they tell all their friends that they had an absolutely fabulous time and that they have to come to the U.S. Open.
There are a lot of sporting events that I've been to that I don't always think is an event. This is an event, but it just feeds into so many different things, between the tournaments that you see, the food, the wine, the experience. It's incredible. I am like blown away. It's great. It's great. Good luck.
Thank you so much.
Get some rest somewhere.
We'll try.
All right, Kirsten Courier. She's Chief Commercial Officer of USTA. That's a wrap for us for our first day. We're going to be back here tomorrow.
That's pretty cool.
Yeah, no, it's way cool. It's really amazing.
Let's go see some tennis, drink some Honeydeuces.
Yeah, we're going to, the Williams tonight. The Williams sisters playing. You are listening and watching